Germany and Italy are among the countries suspending travel from the UK. Another round of Brexit talks ends without agreement. But there is some relief. Congress reaches a $900 billion stimulus deal. A vote is expected later today. US equity futures prove their resilience, with the Nasdaq and Dow temporarily pointing higher, although now succumbing to the downside. Welcome back to the program, everybody. Just moments to go then until the start of the European equity trading day. Yes, I'll just give you the nuance over US futures. Nasdaq futures do point to the upside, but Dow and S&P futures point to the downside. Nasdaq futures point to the upside. The Nasdaq managing to focus on other matters. Elsewhere, we are here in Europe and in the US, all focus on this new variant of COVID-19 and what that does, what the latest lockdown measures in the UK, as extreme as they are, what they do to businesses in the United Kingdom and beyond. We've seen various parts of Europe coming forward with travel bans on those from Britain, and so as a result of that, this has become a much more European focus. And even in the Middle East, in Asia, we're seeing various countries come forward and say we're not going to accept flights from the UK right now, as scientists all over the world scramble to work out how serious this new variant is. So the decisions over the weekend in the UK to put 15 million or so people into much stricter lockdown here in the southeast of England, that is having an impact on markets right now. The FTSE 100 down by 1.6%, the CAC 40 in Paris down by 2.4%, the IBEX in Madrid down by over 3%. We're having a knock-on impact onto other assets. So we see strength in the dollar, we see weakness in the oil price. So a lot of those risk-on trades being unwound today, all those moves that we've seen into cyclical stocks, you might expect those to very much be questioned, and we can just start to see some of that coming through. I'm looking for response in some of the airlines, for example. I can see that Ryanair is down by more than 5%. In the hospitality space, JD Wetherspoon's down by more than 5%, and we're waiting for some of the other airlines to start opening up. We'll keep an eye on that sector, as I say, and the food delivery businesses as well, to see where we're getting response to the latest lockdown news. London and the southeast of England then are under emergency lockdown as the government attempts to control a fast-spreading new strain of the virus.
The new variant is out of control, and we need to bring it under control. And this news about the new variant has been an incredibly difficult end to, frankly, an awful year.
More than 16 million Britons are required to stay at home. The virus mutation is causing concerns across Europe, with countries including Germany and France suspending travel links to the UK. Joining us now is Sam Fazeli, Bloomberg Intelligence Senior Pharmaceutical Analyst. Sam, we're sitting here focused on the market response, the market fallout from the latest lockdown measures, but really, I suppose, we're still scratching our heads to fully understand the significance of this new variant. One thing that the scientists do seem to be sure about right now is that it is more transmissible than other variants. How significant is this in your mind?
Good morning, Anna. So I think the transmissibility is something that has to still be proven, the increased transmissibility. It is hypothesized at the moment that it is based on the population data that they're seeing, but it's a strong hypothesis, I would say. So that's the way to think about it. And what that means is that the measures that governments are taking, wherever this mutant turns up, and I am pretty certain it will turn up elsewhere too, in terms of social distancing and masks, has to be doubled down on that, because that's the only way you can stop any transmission. So.
Yeah, we were hearing from the WHO earlier that the UK does a lot of genetic sequencing, and so as a result might be more likely to find these mutations as they develop, and that if you look harder in other places, you might also find them. We also understand that it is in some other parts of Europe, Sam. So how much do we know about the spread of this variant?
Yeah, so not a lot, as you rightly say. The UK and Denmark are absolute leaders in the pace and the quantity of genomic sequencing that they've been doing. So I would be really interested to see what is happening in the United States. The hypothesis seems to be that this has been driven by the use of so-called convalescent plasma in patients that have immunosuppressed situations, so that to help them cope with an infection. So the infection lasts a long time, and that creates the opportunity for the virus to mutate. But they've been doing that in the United States too. They've been doing that in elsewhere. So I would be very surprised if we don't find this, and within the next week or two, I'm sure we'll start hearing of stories about how widespread it is a key question.
Sam, thank you very much. Sam Fazeli, Bloomberg Intelligence Senior Pharmaceutical Analyst. Thank you very much for giving us your thoughts. 4 minutes into a European equity market session that looks really negative then for European stocks. US futures mostly point to the downside. NASDAQ futures a little bit brighter, but Stock 600 here in Europe now down by more than 2%. And just giving you some of the aviation response, I mentioned Ryanair down by more than 5%. Lufthansa down by more than 8%. We don't yet have opening prices on IAG or EasyJet. Joining us now, Esti Dweck, Natixis Investment Managers, Head of Global Macro Strategy. Really good to speak to you then, Esti. I know that you, like many investors, had started looking at the cyclical trades, the opening up trades. Does it now seem as if maybe that was a little premature, or were we always going to get these winter setbacks and we need to focus on the medium term?
Good morning. We were always going to get these setbacks, and we were always going to have profit taking, and we knew it was going to be a difficult winter. We knew measures were going to get tighter, particularly in Europe. We went from trying to save Christmas to now kind of blocking Christmas, and not just in the UK, and very likely January, February, until the better weather of Easter. It was always going to be complicated. So I think overarching is still going to be the vaccine news. That doesn't mean we can't have some down days like we're seeing this morning, or that it can't continue a bit. But when you think about the outlook for 2021, it's still a lot stronger than it was for 2020. Vaccine rollouts so far have been going okay. This new virus mutation doesn't seem to impact the vaccines because we've seen hundreds of mutations already of this COVID virus. So I don't think this is really surprising at this point.
Okay, and just to underline the response that we are seeing, we see IAG is now opened, EasyJet both open, and both open around 16% to the downside. So IAG down by 16%, EasyJet down by 16.5%. And I should say it's not just hospitality sectors we're seeing this in. We're also seeing energy under pressure, bank shares under pressure, energy under pressure because the oil price is down by just over 3% overnight. Banks under pressure, it seems, because of, again, perhaps these cyclical trades have been overdone. When you look at the banking sector then, Esti, I mean, we've got HSBC down 1.6%, Standard Chartered down by more than 3%. Do you think maybe there again we've been a little too quick to go back into those cyclical trades, or what's the story on banking?
We're still pretty optimistic about European banking. Again, reversals aren't that surprising. Of course, the rotation did start a bit early just on the vaccine news, and there are still plenty of things we don't know. And there's still plenty of question marks about the vaccine rollout and a lot of potential hiccups there. Valuation-wise, European financials are still extremely cheap. There's potential for catch-up there. Obviously, airlines and others are going to get hit because lockdowns are looking stricter. A lot of these Christmas travel is not going to happen now. So I don't think it's a question of was it too soon or not. It could have been, did we get a little too carried away? And when you look at positioning and sentiment, that's probably more the case. But again, these types, so maybe the UK news was a little worse than expected for sure. But these types of days are not surprising, even in a kind of positive, bullish outlook perspective.
Yes, as long as the virus the virus positive news flow, I suppose, remains on the agenda, remains on the horizon into next year, then maybe this is just this short-term blip. And I should point out, it's the 21st of December. It is the shortest day in the Northern Hemisphere. Perhaps that gives us reasons to be cheerful from tomorrow onwards. We'll see, Esti. Let me ask you about the oil sector then. So we have oil prices down by more than 3%. We had some news flow coming through from Shell overnight, some specifics around their business. They're talking about the quarterly oil product trading business significantly lower. So there were some reasons to be gloomy about Shell, but Shell is falling in tandem with BP and other oil businesses. How do you play the oil sector at this point?
A lot of it is about investment horizon. We know the picture for oil gets better throughout 2021, right? The more we vaccinate people, the more people can get back to travel. We know particularly that people want to do tourism or leisurely travel, maybe not as much business travel compared to the pre-crisis. And we always knew also that at some point there's still very abundant supply. So you have this rally in oil markets, in oil prices, and then at some point it was probably going to get a little bit capped by supply. Today, this is a question of, well, we're going to travel less over the festive period, and then we're going to travel less in the first quarter. Again, not really surprising, but it just postponed some of that pickup in demand that the oil sector was expecting. So if you're trying to trade it short term, then it might look a little ugly for a couple of days. If you're thinking, 6-12 months out, I still think there's some upside potential here, even though at some point, again, I think it might be limited.
And I'm reminded by the relative outperformance of the NASDAQ futures overnight, Esti, and also the relative outperformance of food home delivery businesses this morning in Europe, the likes of Ocado, the likes of HelloFresh. Reminded by those moves that, the work from home trade, the technology trade around the pandemic maybe isn't done yet. Were you thinking when you were getting into cyclicals that you were rotating away from those, or were you keeping exposure to that sector?
We've kept exposure to that sector. So first of all, as you've said, the work from home trade isn't over yet, right? We're going to be working from home for a long time, and it's going to take a lot of time to get back to normal, or even to start to get back to normal. And at this point, the timeline is somewhere in the summer of next year, right? It's a lot of people that need to get vaccines before we can reopen much more broadly. If you think of technology in particular, for me, it's a long-term structural secular winner. Businesses are going to need to invest more into technology. People are, communicating more, shopping more, working more online, and all of that isn't going to go away even when we reopen. So can the sector underperform as cyclicals take over a little bit and we get this kind of catch-up reopening trade? Absolutely. Again, if I'm thinking 12 months out or beyond, I don't think this is the end of the technology outperformance.
Esti, thank you very much. Stay with us. Esti Dweck, Natixis Investment Managers, Head of Global Macro Strategy. Really good to speak to you. We'll get further thoughts from Esti shortly, coming up on the programme. Any cause for upside, please? Congress reaches a deal on a $900 billion pandemic relief package. We have that brighter story next. This is Bloomberg.
on the way. Moments ago, in consultation with our committees, the 4 leaders of the Senate and the House finalized an agreement. There'll be another major rescue package for the American people. As our citizens continue battling this coronavirus this holiday season, they will not be fighting alone.
While this bill is far from perfect, nor is it the bill that we would pass if Democrats had a majority in the Senate, it is a strong shot in the arm to help American families weather the storm.
US Congress has reached a deal on a roughly $900 billion pandemic relief package. The hard-fought agreement is aimed at supporting the US economy as the coronavirus pandemic continues to rage across the country. Lawmakers are expected to vote on the deal later today. Esti Dweck, Natixis Investment Managers, head of global macro strategy, is still with us. So some brighter news for us this morning, Esti. Certainly in other circumstances, on another day, you might have expected this to drive something of a risk-on move in markets. We've seen the dollar focused much more on the new variant of coronavirus and the negativity around that, rather than focusing on the pandemic relief fund that we're now getting in the US, this $900 billion. How would you expect the dollar to respond to this latest news flow surrounding the latest bailout in the US, the latest support package in the US?
At this point, it looks like it's a combination of the more negative news in Europe and just the fact that the dollar has weakened so much in the last couple of months that, again, taking a breather on some of this news isn't unexpected. Of course, normally you'd have a much more dollar weakness coming with the stimulus announcement, although, of course, some of this was expected, right? For the past week or two, we had been anticipating a deal. Once this bipartisan proposal came out, and it would look like it was going to be tied with the budget, the probability of getting this done before Christmas had gone up significantly. So some of this was priced in, and if anything, no agreement on this in the couple of days now ahead of the end of the year would have been another negative surprise. So net definitely positive. A lot of the important components, as you're showing here, are in this new bill, and it did come, before President-elect Biden arrives in January. But some of this was already expected, and maybe that's also why the dollar's focusing more on the European story than the stimulus story right now.
Right. And Esti, when you talk to clients, what is their concern at this point? Were they assuming that we would get that fiscal support coming through? And what do they expect to see all of this monetary and fiscal support do to inflation? What's the story? What's the conversation around inflation at this point?
That's the big question. I think, we get a lot of discussions on the rally, on corrections, on rotation, as we've already discussed, but we just keep getting questions about inflation. And frankly, I'm in the camp where we're not going to see massive inflation. Most of the stimulus, and we saw exactly in the new announcement this morning, it's been about income replacement, and the unemployment benefits have actually been brought down because they were thought to be a little too generous and disincentivizing going back to work over the spring and summer of last year. So this is not massive additional stimulus that's just coming into people's pockets and that has to lead to inflation. We've already seen that the monetary side doesn't necessarily lead to inflation. So clearly a question from our clients, clearly a question from a lot of investors. We're seeing positioning move around this as well. We don't think is going to be that big of a concern. And especially we don't think the Fed is going to see this as a massive concern and change any of its recent forward guidance.
And Esti, when you look at which markets to put money into then at this point, if you think that there were always going to be hiccups, there were always going to be setbacks that got in the way of the opening up trade, the pivot to cyclical trade, where do you want to put your money at this point? I'm looking at year-to-date moves in major markets on the WEI function on the Bloomberg, and I can see that the US has really outperformed. We talk about whether Europe will catch up with many of our guests. So do you think we will see catch up in Europe, or do you still want to put money into US large caps right now? There's quite a big range between the Dow and the S&P and what the Nasdaq has done, for example.
Absolutely. And again, for me, this is really about time horizon. If you're trying to look at, the next few weeks and the first quarter or so of 2021, I'd stick with the rotation. I think the vaccine news is going to remain supportive. The fundamentals are supportive. We got the fiscal stimulus. We're getting, obviously, the ongoing monetary stimulus. Earnings are pretty good. Fundamentals are strong. And we're going to see this catch-up trade. If you're thinking full 2021, I think there's a bigger question mark in the sense that will we have already gone through so many different phases throughout the summer that we kind of end back where we were before the pandemic and in a situation where the US and a number of emerging markets are outperforming. So the time horizon depends very much. I absolutely believe in the rotation. I'm just not sure how long it's going to last and if that will be for all of 2021.
Thanks very much, Esti. Esti Dweck, Natixis Investment Managers, Head of Global Macro Strategy. Esti will be continuing her conversation with me on Bloomberg Radio. That's at 9 a.m. UK time, so the top of the next hour. I'll head to Bloomberg Radio for that conversation with Esti. A quick check on the markets then. Stock 600 in Europe down by 1.7%. The FTSE 100 cushioned from the worst of the falls by what we're seeing on the pound. You can see pound weakness there in that graphic for you. In terms of the stock market and where we're seeing the worst reaction, the sector that is most hit is, of course, the travel and leisure sector, down by more than 3.8% right now. IAG, the biggest faller, down by 13.5% this morning. This is Bloomberg. Welcome back to the European Market Open. And what a day we're seeing on European equity markets. 23 minutes into the European equity market session for this Monday, down by 1.9% on the stock 600. Very much a focus on the latest spread of the new variant of COVID-19. Now, sticking with our main story today, European stocks then falling this morning, hit by the coronavirus, the London increasing isolation from the rest of Europe, and of course the missed Brexit deadlines. Joining us to dig through the market reaction is Bloomberg's Danny Berger. Danny, what are markets telling us then this morning? How much concern is there over this new strain of the virus?
Look, the pound down by more than 2 standard variations. Clearly, we're getting some immense strain. Oil is off a lot, so that growth story really hampered by this news of the UK lockdown. I don't think it's necessarily just that we're having the UK increasingly isolated from the rest of Europe. Yes, that certainly is hitting travel, but I think this tells us that we're not necessarily in a place where we won't continue to see lockdowns throughout different regions, really throughout the entirety of the Western world. So that means even if we do get any sort of agreement on Brexit, this will be a threat continuing into the first quarter. Now, I don't think that had necessarily been priced in yet, these really severe lockdowns in Q1. And you can see it there in the pound overnight volatility jumping to the highest since we saw in the spring. The pound is off the most since March 18th. So we're getting sort of this echo of what we saw earlier in the year, how the markets initially reacted to the pandemic. We're seeing not as a severe version of that, but certainly a version of that as well. And then I think, you know, if you add Brexit into the story, Blue Bay Asset Management taking off their longs, saying when the market is illiquid as it is at the end of the year, you just don't want to have any positioning right now.
Danny, thank you very much. Danny Berger with the latest on the markets. It is the shortest day here in the Northern Hemisphere, and for some reason that makes me feel better about all of the gloom that we're covering this morning, as difficult as it is. Of course, we do have the upside, the up story, if you like, of the stimulus package being passed, or at least congressional leaders agreeing to it in the United States. That's the other side of the trade, if you like, this morning. And NASDAQ futures 2 points to the upside. Let's get a bit of a look at the movers then here in Europe. Danny's been through some of the big picture narrative about why we are moving, but here are some of the individual gainers and fallers, and we have more fallers actually for you. So IAG moving down by over 13%. Okay. This doesn't take a genius to work out the link between aviation and the lockdowns being extended in the southeast of England. HSBC also falling. Some of the banking stocks have done so well on expectations of cyclical trades and expectations of dividends to be paid out. Shell also in focus. Oil prices down by more than 3%. We heard some lines from Shell this morning about the extent to which that is weighing on their business, but they're in good company because BP also under pressure this morning. Ocado, one of those bright spots to the upside, up by just over 3%, as we see, of course, many people getting back into those working from home delivery trades. More on the markets when we return. This is Bloomberg. Welcome back to the European markets open 30 minutes into Monday's trading session. And if you were hoping for a quiet run up to the holiday period, to the Christmas period, then no such luck, I'm afraid. Stocks falling this morning. We've got European equity markets falling quite considerably. The Stock 600 down by just over 2%. The FTSE 100, of course, perhaps a little ironically, cushioned from some of the worst of those falls because of the weakness that we see in the pound. So for that relationship, that negative correlation between the two standing, it would seem. In terms of the sectors that are in focus then, travel and leisure, that is the worst performing sector. We also see banking stocks coming under pressure. To the upside, though, we do have some money going into some of the more work from home stocks, the likes of Ocado moving to the upside, the cleaning products made by Unilever, Reckitt Benckiser, all of those sort of consumer staples, if you like, those moving to the upside. Drugs and grocery stores and personal care, that's the name of the sector that is doing the best this morning, even if none of these sectors in Europe are actually in positive territory in their entirety. Now, another deadline for Brexit negotiations has passed without any agreement. Talks are set to resume today, even after the European Parliament's time limit has expired. Let's get to our EU Brussels reporter, Maria Tadeo, who's joined by a guest who hopefully can shed some light on what this means for the European Parliament. Maria.
Well, that's right, and I'm certainly hoping for that too. And we're joined by Bernd Lange, who is a member of the European Parliament. He also sits on the very influential Trade Committee at the EP. And Mr. Lange, yesterday, Sunday, you said that was a clear deadline, that you needed a legal text to be able to ratify the future big hypothetical Brexit deal. Of course, it's Monday morning and there's no text. So what happens next?
Yeah, it's quite clear. The ratification process inside the European Parliament can't be closed until the end of this year. So there will be a period starting from the 1st of January where, if there's a deal, this deal is not really ratified by the Parliament. And we have to manage this transition period so that the Parliament has enough time of scrutinizing such a big trade agreement from more than 1,000 pages. Let's see, and we will discuss it now quite carefully how to manage this situation. But of course, nobody is knowing if there will be a deal or no.
Okay, so what you say is the European Parliament is not going to ratify the text this month. It's not going to happen. Time's already run out. So I wonder, is that the consensus view at the European Parliament? Is that what all of you are thinking? You're just not voting this?
Yeah, of course. This is a common approach from all political groups. Of course, normally we have a period from 136 in average of time for scrutinizing trade agreement. And of course, we have some experience in negotiating trade agreements and scrutinizing trade agreements with Japan, with Canada, and so on. And this is, of course, not possible until the end of the month. So we need some extra time for a proper scrutining process. And by the way, the final yes or no on a deal is by the European Parliament.
Right. And you said on January 1st, based on that logic, we're headed into a period of no deal. So what does that period look like in your view then?
Yeah, of course, we can find some measures to stabilize the situation as it is. So it's really depending on the question if there will be an agreement or not. And then, of course, we can also discuss to provisionally apply some parts of such a deal to avoid disruption in trade of goods and services. But let's see, it's really depending on the situation. We are ready to be flexible, but the final word will be in the next year.
Okay, and just to make it clear, European leaders could agree to some extent to extend the transition period to bridge the agreement being voted or agreed at a political level, and then the ratification that would come in the European Parliament. But I wonder, do you foresee any scenarios in which the UK and the EU are going to trade on WTO terms purely because of logistics that are coming into place now?
Of course, we are prepared. So it's not my hope and not my wish. But if there is no possibility to find a compromise on fish, on level playing field and some other open issues, then of course we are prepared for a no deal scenario, going back to the WTO rules. We adopted just last week 4 further consistency measures so that we can avoid a total disruption in the supply chain. But nevertheless, there will be more controls, there will be customs introduced. So it's a totally different situation as we have now.
Right, and you say that you've taken contingency measures and that Europe is ready for the no-deal scenario, but I would say when you speak to business on both sides of the channel, they say that that's not cleared in any way, that they really don't know what happens if there's no deal on January 1st, or even if a deal is not ratified. So what do you say to perhaps some criticism that ultimately you're playing with fire here, that you're affecting the way that people make money and their livelihoods?
Oh, they are right. So I have no understanding for the negotiation process anymore, to be honest. It's not adequate to the democratic process, but even worse, it's not adequate to the consumer and the people on the ground. What should they to be aware on? What's going on in 10 days? So this is really less of responsibility on the negotiation process.
Right, and just very quickly, do you foresee that at this point, Barnier will come up with a deal that's only going to come very close to New Year's? And I'm thinking 29th, 30th, 31 December. Is that what you're thinking?
No, I don't think so. But nevertheless, nobody knows. I have not my crystal ball here with me. I hope that there will be a deal, but I'm not sure. And when it will be on the table, I have no clue. But we are prepared to be flexible to avoid the worst disruption in the interests of the economy and the people on the ground.
Well, Bernd Lange, MEP, thank you so much for joining us after that deadline that, again, has gone past on Sunday. On a Monday morning, when we're already, by the way, seeing disruptions now related to the virus, but could get worse possibly because of coronavirus and the Brexit effect coming into that. Anna?
Thanks very much, Maria, today with that really important interview there, talking about the ratification process with Bernard Lange of the European Parliament. And he says that time has run out to ratify any deal before the end of this year. Let's get a Bloomberg First Word News update. Here are today's top stories for you. London is in lockdown as the government warns a new strain of coronavirus is out of control. This so-called Tier 4 means people have to stay at home except for specific reasons, including work. It also bans household mixing and closes non-essential shops. European countries, including France and Germany, are suspending flights from the UK. Congress has reached a deal on a roughly $900 billion pandemic relief plan. Democratic and Republican leaders announced the deal yesterday. The text is still being written, but the House is expected to vote on the deal, followed by the Senate. It leaves out the two most contentious issues, state aid and a liability shield for business. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Quick check on the markets then. 38 minutes into a European equity market session that looks very negative, down by 1.7%. US futures continue to point downwards in the main, but NASDAQ futures point to the upside. We've seen money coming out of the pound, money coming out of stocks then and going into the perceived safety of bond markets. As a result, we see bond yields falling. We've got gilt yields there for you now down at spot 183 on a 10-year horizon. Up next, activist investors like disruptions, Brexit, COVID and market valuations make the UK a prime target. Up next, we discuss with Malcolm Mackenzie from Alvarez & Marsal. This is Bloomberg. Welcome back to the European Market Open. 41 minutes into a trading session with the European stock markets down by 1.6%. The focus of the new strain of the virus might be in the UK, but the UK shielded from some of the worst falls of the European equity markets this morning because of weakness in the pound connected with the virus and also a lack of progress on Brexit. Let's talk about how some of those matters build into the role that activist investors play here. British assets are facing a double whammy from the new strain of coronavirus and the lack of progress in Brexit talks. What does that mean for activist investments in the United Kingdom? Joining us now to discuss is Malcolm Mackenzie, Alvarez & Marsal's Managing Director. Malcolm, we've often spoken to you about the role of activists then, and how do you see activists approaching the UK at this point? Many investors tell us how undervalued UK assets are right now.
Yeah, so through 2020, activists have been sitting a bit on the sideline. There's been much less activist activity. But we believe, in our forecasts show, that actually in 2021, activists are going to be coming back strongly into the UK. For the reasons that you're saying, we've got, in fact, it's a triple whammy of disruptions. We've got technological disruptions that we've all seen. We've all changed how we live our lives. We've got the COVID disruptions, which are obviously right in the news today, as are the Brexit and the broader trade disruptions. And activists love disruptions because it sorts out, is the executive management really premier division or simply second division? And if it's the latter, they won't manage well through the disruptions, the share price will suffer, and that provides the opportunity for the activists.
How are activists dealing with ESG matters, Malcolm? I wonder, a lot of the activists you speak to or you have dealings with right now, are they asking for more money to be returned to shareholders, share buybacks, dividends, and the like? Is that the focus still, or is the focus actually on some of the long-term sustainability issues that have been thrown so into the spotlight in 2020 around governance and the environment?
Well, I think the switch is to the environment, to the E and the S bit of ESG. There's always been G and the governance and the leadership, which activists have been vocal on. But now we see and we predict there'll be much more emphasis on the E and the S. And you've seen this, say, in the Exxon situation, where you've seen engine number one allied with an interesting shareholder activist, the Church of England, using its stake in Exxon to demand changes on the E side, and we see more of that coming through during 2021.
And what kind of percentage share ownership do investors need to have really have their voices heard, Malcolm? I mean, that's a very general question. Maybe it depends on the amount of free float. It depends on the size of other shareholders. But just broadly speaking, how has that evolved over time?
So an activist will typically be looking for 5 to 10% of the free float. But an activist, as you say, can't really do anything with 5 to 10%. They can't put anybody on the board. They can't take control of the business. They'll be listened to, but little more than that. So what an activist needs to do is to form a wolf pack, what's called a wolf pack behind them, where they're making the demands, but other typically long-only investors like the Fidelity or the BlackRocks of this world are sort of following behind them and are tacitly agreeing and supporting with their investor demands. So that's the sort of type of way it operates. Because if it comes to an ESG or putting somebody on the board, you've got to have sort of 40% or whatever following you, and that's why the sort of the analysis and the research that the activists do is so important, and that they are prepared to challenge things which maybe the internal management isn't so happy to do. They find the sacred cows and work out which ones should be slaughtered and which are the little gems in there which need to be grown.
Malcolm, thanks very much for joining us. Malcolm Mackenzie, Alvarez & Marsal, Managing Director. Thanks for bringing us your thoughts on this story. Now, viruses mutate all the time, but a new COVID variant that emerged in southeast England is causing particular concern across Europe. The WHO's chief scientist told Bloomberg UK scientists are working with the WHO on studying the mutation.
It's really important that we study the impact of these mutations, particularly when it starts becoming a dominant strain. We've seen this happen before with other strains where they arise and then they slowly take over and they become the dominant strain. Perhaps they have some advantage which allows them to spread. But I think the bottom line here is really that the interventions that are needed to prevent the spread, regardless of which variant it is, are the same. And I think that's key, and that's where we should be focusing, while scientists are still doing the lab experiments to figure out what are the implications of this new variant. Does it really enhance transmissibility, as has been suggested? Does it really prevent antibodies from binding to the virus? And will it have any implications for vaccine efficacy? These are still questions that scientists are hopefully going to answer in the coming days and weeks.
How long will it take, Dr. Swaminathan, until we know this variant's response to the vaccines?
I would say that it's going to take, a couple of days, if not a week or more, because there are several experiments that need to be run. And because this is, it's such an important question, it needs to be addressed properly. And we have to let the science and the data drive us. So what needs to be done is experiments in the laboratory where this strain of virus is cultured, and then it's exposed to neutralizing antibodies from people who have either had natural infection or people who've received the vaccine in a clinical trial, perhaps, and who have antibodies that were, vaccine-induced. And so when we do those experiments, then we will know whether we can actually neutralize this strain of virus just like you neutralize any other strain of the virus. So we need to wait for those experiments to be done.
Is this new variant unique to the United Kingdom?
Well, the largest numbers of genome sequences of this variant have been described from the United Kingdom. There have been some reports from other countries like Denmark, the Netherlands, I believe Australia has one case. But again, we need to keep in mind that the UK is probably sequencing much more, than many countries. And so it's not really easy to compare. Similarly, South Africa, within the African continent, there are huge disparities. South Africa does most of the genome sequencing on the continent, and therefore they are describing a variant as well that's recently seemed to have become much more prominent. So again, a lesson is more countries need to do more sequencing and deposit it in the public databases that we have now for sequences like GISAID or the GenBank and so on, so that scientists can actually compare, look across countries, and also look at the timelines of how these strains have been evolving. So yes, at the moment, most of these strains have been described from the UK, but I think we have to remember the caveats that I just mentioned, and perhaps if we look harder, we might find it in other countries as well. It's really important for us to keep track of the virus as it evolves, because it's so important for treatments and for prevention, for vaccines, for monoclonal antibodies, and so on. And it's very normal for a virus to behave like this, So all viruses do. It's just that there's so much of focus and interest on this virus. I mean, the influenza virus mutates much more rapidly than the SARS-CoV-2 virus, and that's why every year we have to redo the strain selection for the flu vaccine for that particular year, and WHO coordinates that. So these are all possibilities in the future that we need to consider for this virus as well. But at the moment, I think there is no indication that either vaccines or treatments will not work. Viruses, as they come under pressure, as you start using drugs and vaccines, viruses evolve to try to avoid those. So that's the natural evolution. But at this point in time, I don't think we have any evidence to suggest that the vaccines under development, or for that matter, the monoclonals, will not work for the majority of people.
No indication, no evidence that the vaccines won't work. Let's remember that. That was Dr. Soumya Swaminathan, Chief Scientist of the WHO, speaking to my colleague here at Bloomberg, Anne-Marie Hordern, a little bit earlier on this morning. Up next, more on the markets and the response we're seeing from various countries around the world to the latest outbreak in the UK. Norway halting direct flights from the UK. An Irish minister saying that the 48-hour UK travel ban is likely to be extended. All of this weighing very heavily on risk assets this morning. We'll talk to Market Live's Eddie van der Walt next. This is Bloomberg. Welcome back to the European market open. 53 minutes into a very negative session for European stocks, down by 1.8% on the Stoxx 600. Eddie van der Velde joins us from the Markets Live team. Eddie, when I woke up this morning, I saw the news surrounding the US stimulus being agreed in the US, and I thought, well, maybe there is some room for some upside for risk assets on the back of that. But no, that is outweighed, it seems, by very more immediate concerns around the virus in Europe. What's your take on the balance of those?
Yeah, I think so. I think on the one hand, the virus has definitely spooked people. People were talking about a second wave. Not a lot of people were talking about a new strain, though. So a new strain, I think, has spooked people a little bit. But I think once markets get to grips with the idea that perhaps the vaccines are still effective against this new strain, we don't know yet, but that's certainly the noises that we got from the World Health Organization, from the White House, and from Whitehall, or from Westminster yesterday, then I think people will start calming down. But on the question about stimulus, this is an aid package, really, isn't it? It's not really this big stimulus package that everybody is waiting for. This is just to keep the economy ticking over. So I think the balance of those two things probably gives markets a little bit more pause for concern this morning.
Yeah, it seems to be all important in terms of market thinking going towards the end of the year and into next, that the link between the virus and the vaccine remains intact in the face of this new strain. And if that is true, then perhaps some of the selling is overdone. We could ask that question at least. Let me ask you then about something that's also been very topical as we come towards the end of this year, and that's been Bitcoin. The latest rally in Bitcoin, Eddie, has it excited you?
It certainly has excited me personally. I tell you what, I've installed my own instance of the Bitcoin node over the weekend just to see how it works. Look, people are getting very excited about it. Bitcoin, it appears to have grown up into a fully investable asset class. But I think people still need to remember who this is appropriate for. Just because you can invest in something doesn't mean that you should. This is still very volatile. It is still a very uncertain space at the moment, and it's still only appropriate for those with a very long time horizon, or for those with a highly overfunded portfolio.
Okay, Eddie, thanks very much. Always good to speak to you and on such a gloomy Monday. It's very nice to hear your voice. Eddie van der Velde, our Markets Live editor. Thanks for joining us here on the European Market Open. That is it for the European Market Open. Stay with Bloomberg TV. Surveillance is up next. London, then, the first working day under new lockdown restrictions. London and beyond, I should say. Much of the southeast of England in the same situation. Just how long will they last? This is Bloomberg.
European equities slump on virus concerns, with travel and leisure stocks leading declines. Comes as London goes into full lockdown, another U-turn for the government. France, Germany, and Italy are among nations suspending travel from the UK. Britain's biggest port stops all traffic to the continent. But in the U.S., Congress has reached a deal on a $900 billion spending package. The vote takes place later today. Welcome to Surveillance. I'm Yusuf Gameneddin in Dubai. Let's get straight to the markets then, because there's a dark cloud that looms over risk assets. The sell-off has been accelerating, not just around concerns of the lockdown in London, but the ripple effect that would have through the travel and tourism industries around the globe. On the stocks, Europe 600, we're down about 2% at the moment. U.S. 10s, the Treasury's grinding higher. We have on the data front personal income and spending data. Look out for that on Wednesday. The big moves are in the FX space. This is the biggest move since June 2020 for the Bloomberg Dollar Index, up 0.6%. Brent crude under pressure as well, down 3.5%. It is shaping up to be the Monday pain trade. Let's flip the board. Some other important movers to look out for. One is gold. That's already up 24% this year. We're building on that at the moment on the back of those haven flows. Cable 132.64 needs little introduction, little explanation. Down 1.9%, a double whammy that's playing out here, but also disruptions and dislocations around the NOK and in the broader emerging markets FX space. Now, let's break this down in more detail, because the emergency lockdown in London and Southeast England is causing Christmas chaos, with more than 16 million people being told to stay at home. The move follows the detection of a new, more contagious strain of COVID-19. Police blocked travelers from boarding packed trains just before the measures came into force. And then holidays abroad have been cancelled, with European nations banning UK arrivals.
The new variant is out of control, and we need to bring it under control. And this news about the new variant has been an incredibly difficult end to, frankly, an awful year.
Well, let's flesh out the market impact in a bit more detail with Danny Berger. She joins us for more. Danny, what exactly has popped up on your radar?
Look, if you want to look at stocks that have been hit hard today, Yusuf, you have to look at the travel sector. Stocks like IAG, TUI, Ryanair, all of some of the worst performers today. Part of what we're seeing is, look, they haven't given up those gains we saw over the past few months with the hopes of the reopening trade with that vaccine trade. So we're not to the point yet where we were at the beginning of the pandemic, where these sold off really severely. However, what needs to happen now is investors need to look at this market and say, okay, perhaps we are going to get more first quarter lockdowns. And that means we need to price in some of that. That's not in markets now, and that's the action we're starting to see. That means value is going to suffer, be it these travel sectors or banks. And then to the upside, you get those more momentum growth names. Of course, currencies, that's the other one we need to keep our eye on today, because the pound is having a move to the downside. That's a 2 standard variation. It's its worst day, on track for its worst day at least since March 18th during the beginning of that pandemic. And that first asset I have on the board here is cable overnight volatility. Options markets are starting to price in more pain. This is typically what we see when there's Brexit deadline concern, but it's not just that, it's the virus as well, Yusuf.
Danny, thanks for the moment. That's our markets reporter, Danny Berger. Let's get more on the situation now and get to David Merritt. He's Bloomberg's senior executive editor. David, the Prime Minister has effectively canceled Christmas for many people. Where does that leave the political situation?
Well, it's pretty precarious, and there's a real sense this morning in London of a bit of panic around the government, with problems piling onto other problems. We have this very worrying surge in infections across London, the economy, which is, of course, the engine of the whole UK economy, being effectively shut down over the weekend, just days before Christmas. And then we have European nations banning travel between their countries and the UK. That's led to the shuttering of the port at Dover. About 20% of the goods that are consumed in the UK come through that port. And so huge concerns about supply chains, both of food and, of course, of medicine as well in the coming days, just a few days before Christmas. And then, if that were not enough, of course, we're less than 2 weeks away from the end of the transition period for Brexit. So Britain leaves the single market, and as yet we still do not have a trade agreement with the European Union. Scenes of chaos at Dover this morning, a sort of grim dress rehearsal, perhaps, for what we could see towards the end of next week if those negotiating teams can't bridge their differences in the coming days.
David, fantastic insights. Thank you. That's David Merritt. He's Bloomberg's senior executive editor. Let's get some more reaction from the European mainland. Bloomberg's Maria Tadeo's in Brussels. Maria, I mean, how disruptive can this really get at this stage?
Yeah, well, Yusuf, it can get very disruptive. We have a huge list of countries now, some of the biggest countries in Europe, including Germany, France, Italy, the Dutch, Belgium, and so on, deciding they want to restrict access to UK travelers into continental Europe. They cite that new variant of the virus, but this is a time of the year, you know very well, that's very, very busy for ports, for airports. There's a lot of people moving around trying to make it home for Christmas. And Yusuf, that list could get bigger, could get longer. We know there's a meeting happening in Brussels in about an hour's time where more measures could be announced. Now, politically, the reaction from the European governments is that they are simply reacting to that press conference on Saturday where the Prime Minister says we have identified a new mutation. This virus is spreading quicker, and that's led to this very quick reaction happening in just 24 hours. The only big exception in Europe at this point, though, is Spain. And they have a lot of traffic with the UK, too, especially of people. And they argue that unilateral measures are not going to help the situation. This is going to lead to big disruptions to air traffic, and it's better to see a European coordinated response. That's where they're waiting for. And just very quickly, David talked about the implications for the Prime Minister when it comes to the domestic situation, but also in Europe, Yusuf. You know, when I look at the European media today, the headline that I see repeatedly is chaos in the UK. Yeah. So that global Britain that Boris Johnson was hoping for, to some extent, looks very isolated from a European perspective.
Maria, thanks for that. Bloomberg's Maria Tadeo in Brussels. We will continue the conversation shortly, also looking at specifically the market impact. But we have a line crossing to Bloomberg from Tesla. Well, shares are falling in pre-market to the tune of about 5.1% in what is the first day of the S&P 500 inclusion. Recall that we've had an astounding rally so far year to date. The stock is up about 8-fold. But now on what is the first day of the S&P 500 inclusion, the indications from the futures are that we might get quite a bit of a sell-off as the stock joins the broader S&P 500 index. We'll keep a close eye on that for you. Coming up then, it's the perfect storm for Boris Johnson with a full lockdown for London. As Brexit negotiations sit on a knife edge. Discuss the outlook for UK assets next. This is Bloomberg.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Yusuf Gamaluddin in Dubai. Sticking with our top story, London and the southeast of England are in a new tier of restrictions as a more contagious mutation of the coronavirus emerges. The pound has slumped on the virus and on the Brexit news as well. Joining us now is Julian Chillingworth, the Rathbone CIO. Julian, we're seeing more countries either introduce new restrictions or consider a cascade of additional measures. Is it too early to speak of a newly developed resilience in some of these risk assets?
Yeah, I think it is. I mean, I think that unfortunately, as your headline highlights, that the concerns around whether or not we're going to get a Brexit deal, combined with the uptick in the new virus cases in the London and South Eastern region, has seen UK assets come under pressure this morning, particularly around hospitality, retailers and the like, and domestic companies. And that concern around the virus has spread to European markets as well. So I think there's going to be quite a lot of choppy markets as we run into Christmas, and quite a lot of uncertainty. And sadly, I suspect that Europe's not going to be immune from this new mutant virus development that we've seen. So I think European new virus cases will be climbing as well.
We'll leave that medical analysis to the medical experts for the moment. I want to zero in on how to respond to this unfolding situation. Let's assume that there are, of course, going to be investors who got railroaded the first time round when the coronavirus hit early in 2020. What would you be telling clients in terms of perhaps building up defensive positioning more aggressively to avoid that kind of replay?
Yeah, I think that we obviously, through the early part of the sell-off in March last year, told clients that they should take the longer-term view and not sell assets. And obviously, I would reiterate exactly the same again. And I think that situation it's considerably different from this time around. Obviously, we put to one side the Brexit situation just for a moment, and we can only put it aside for just for a moment, and say around the virus, I think that we have vaccinations coming. We have very active support from governments around the world in terms of fiscal stimulus and central banks operating a QE policy. So I think that financial markets should be viewing this as an unfortunate hole in the road to recovery. And I think that as the vaccination program is actually rolled out into 2021, people will become a little more relaxed. But obviously, we've got a way to go. And I think we're going to see more days like this as well.
I mean, that's the concern, isn't it? That the vaccination program doesn't stay effective with new mutations of the coronavirus. The WHO has indicated that in principle it should work, but we still need to wait and see what the data actually says. That is a scenario that would bring with it quite a bit of a repricing in markets, right?
Yeah, I mean, I think our view all along has been that markets were probably ahead of themselves in terms of the vaccination program, and that we were likely to find the winter months very difficult, and we would have some volatile days in markets. And sadly, what today is one of them on the back of what was announced by the UK government over the weekend. And I think that we could well see we have other days like this. And I would say to you that we are looking, therefore, at opportunities. We've seen strong rallies across value and cyclical names. I suspect some of those will come back, and the more defensive names will play out better through this time period. But there may be opportunities within that category to revisit some of those stocks.
Julian, I was looking through your research, and a key portion that caught my attention was the way you describe a potential Brexit trade deal. You're right. It seems likely to either be a terrible flavor of fudge or an imperfect agreement. Which of the two is likely to come through then?
I suspect an imperfect agreement myself. I mean, I think that it's no surprise that we've seen another deadline slip at all. And so consequently, I think our view has always been that there was a distinct possibility this could go to the wire on the 31st of December, but even beyond that, and there's suggestions last night from various EU commentators that there could be a possibility of negotiating into 21 around some of this trade deal. So, I mean, I think there's quite a lot of uncertainty to come. But the only point I would make is there definitely appears to be, over the level playing field, some definite new initiatives made. And over fisheries, there was a slight chink from Michel Barnier yesterday saying that there had been some move over sovereignty over British waters. So that in itself, I think, gives a chink of light that hopefully we can get some form of agreement before the end of the year, but I wouldn't bank on it.
Julian, hold that thought. We still have a lot to get through. Julian Chillingworth of Rathbones stays with us as we watch cable go lower by about 2%. It's the biggest move since about March of 2020. Let's get to some of the Bloomberg First Word news stories that we're watching. Congress has reached a deal on a roughly $900 billion pandemic relief plan. Democratic and Republican leaders announced the deal yesterday. The next is still being written, but the House is expected to vote on it today, followed by the Senate. It leaves out the two most contentious issues, state aid and a liability shield for business. U.S. officials say a lengthy effort lies ahead to identify the extent of a suspected Russian hack on federal agencies and private companies. Senator Mitt Romney says Russia acted with impunity in launching the cyber attack, calling for a response. President Trump is playing it down, suggesting China may be to blame. Japan has approved a record $1 trillion budget. It adds to the developed world's heaviest debt burden as the country struggles to fight coronavirus and support its economy. Earlier this month, the government announced a $700 billion rescue plan with some of the funding by next year's budget. Global news, 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. So that's the roundup there. Again, we've seen a Tesla fall 5.1% in the pre-market trade on the first day of its S&P 500 inclusion. The stock is up eightfold, so it's been a remarkable year for Tesla in terms of upside momentum. But on the first day of the S&P 500's index inclusion, we're seeing that come under pressure now, 4.5% as we're indicated as it stands. Well, coming up, here's a bit of a preview of what's in the pipeline. U.S. stimulus breakthrough. Congress reaches a deal on a $900 billion pandemic relief package. We're going to get the full details next. This is Bloomberg.
help is on the way. Moments ago, in consultation with our committees, the 4 leaders of the Senate and the House finalized an agreement. There will be another major rescue package for the American people. As our citizens continue battling this coronavirus this holiday season, they will not be fighting alone.
That was the Senate Majority Leader Mitch McConnell announcing that the U.S. has reached a deal on a roughly $900 billion pandemic relief package. A hard-fought agreement will bolster the U.S. economy as the coronavirus pandemic continues to rage across the country. Lawmakers are expected to vote on the deal today. Julian Chillingworth, Rathbone CIO, is still with us. Julian, is the magnitude of this deal really going to be able to deliver a level of sustainable cheer for risk assets? What's your initial read?
My initial read is I think there will be a degree of relief that they finally got a package through, which is around a trillion, and that it ticks a number of boxes. There's help for the those people who are unemployed, not as much as last time, but still helpful. And there's support for smaller businesses, particularly in the hospitality sector where there's been a lot of strain. So I think that's good. And individual US citizens are going to get $600, some of whom I'm sure will just save that and probably spend the money through 2021. But it's all helpful and good for sentiment in the States, but obviously comes on a very difficult day, as we've been talking about, the European markets.
We're seeing a strong bounce back in the greenback, so we are currently up about 0.7%. It's the biggest one-day move since June of this year. Is that going to perhaps correlate with an incoming administration that might cling on of views of predecessors, including Hank Paulson and Larry Summers, who adopted a strong, solid dollar policy in a global economy to favor U.S. interests?
Yeah, well, I mean, we shall have to wait and see, because, I mean, I think today, obviously, on a pretty, depressing day on the back of the virus news, there was bound to be a bit of safe haven buying of the dollar, in my opinion. But I think that what the markets will be watching for is obviously whether or not the Democrats get control of the Senate by winning the Georgia election vote, which currently looks not likely. But if they were, that would give the incoming President Biden the opportunity to push forward with probably bigger infrastructure programs, more stimulus, but also tax rises as well. So it's a mixed picture for markets on the back of that. So I think that I don't think we're necessarily going to see under a Biden regime a very strong dollar policy. But I may be proven wrong, but I think he will be keen to try and see the US economy grow and bring stimulus packages through.
In the event that we do see a deteriorating economic picture because of new challenges with the pandemic, what else can the Fed come up with here? I mean, negative rates, they've really indicated they're not fans of that, but could they bring that back up?
I'd be very surprised under Jerome Powell, quite frankly, and I'm not sure Janet Yellen either would be keen on that. So I suspect that Jerome Powell has been very clear all along that he thinks more can be done on QE, and has been stating that quite vociferously over the last few weeks. He also has been pushing for fiscal packages, and I think he will view that the package that was announced will be a good step forward. So I think there's a lot more levers that you can see them pull around monetary easing before going down the negative rate camp. And I think that from the US banking industry's point of view, they would obviously be very unhappy about negative rates as well.
Julian, we're going to have to leave it there. Thank you for that. That's Julian Chillingworth there, the Rathbone CIO. I want to get straight to a particular portion of the global markets map. Emerging markets foreign exchange, that is getting hammered this moment. Losses led by the South African rand and as well losses in Thai stocks. So across the board, really, in emerging markets. This is the global picture, specifically sentiment negative. The coverage continues. This is Bloomberg.
another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Welcome to Surveillance. I'm Yusuf Gaminuddin in Dubai. Let's check in on the markets because we have a situation where the sell-off in risk assets is accelerating off the developments around the lockdown in London, but also the implications, right? What does this mean for travel and tourism around the world? Yes, we did get a bit of a relief bill from the United States, but at the end of the day, the pandemic is in focus here and it's weighing heavily on sentiment. The stock 600 down 2%. Treasuries are grinding higher on the data front. Look out for personal income and spending data. Big moves in the FX space. The dollar index headlining that, the biggest move since about June of this year. And then Brent getting hammered there, down 4.1%. A lot of uncertainty around demand because of this new challenge with what appears to be a new strain of the coronavirus. Let's flip the board to just contextualize the other dislocations. Gold, haven flows, as you'd expect, up 0.8%, around the $1,900 an ounce mark. And cable is at 132.52, down 2%. Major move there. And then across the emerging market foreign exchange space as well, quite a bit of selling that is underway. Let's get to the Bloomberg First World News now to give you some of the other key developments. Brexit talks then are continuing today after missing another deadline. Sources say significant differences still remain. And there are two key disagreements: access to fishing waters and limits on state aid. The EU's chief Brexit negotiator, Michel Barnier, says that talks are at a crucial moment. The UK leaves the EU single market in less than 2 weeks. Sydney is tightening virus restrictions amid a growing outbreak of the coronavirus. Social activities are being curbed until at least the 23rd of December. Household gatherings are now limited to 10 people. And at least 3 states are imposing travel restrictions ahead of the Christmas holidays. The 6 biggest U.S. banks are set to buy back as much as $11 billion of their own shares in the first quarter. That's after the Federal Reserve greenlit buybacks for the firms. It follows a second round of 2020 stress tests, with the central bank saying that lenders have the capital to weather an extended downturn. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Let's get back then to our top story. An emergency lockdown in London and southeast England is causing Christmas chaos, with more than 16 million people being told to stay home. The move follows the detection of a new, more contagious strain of COVID-19. Police blocked travelers from boarding packed trains just before the measures came into force. You had holidays abroad that have been canceled. European nations moving quickly to ban UK arrivals.
The new variant is out of control, and we need to bring it under control. And this news about the new variant has been an incredibly difficult end to, frankly, an awful year.
For more, let's get back to David Merritt, Bloomberg's senior executive editor. David, what is the chronology likely to shape up to be in the coming hours as the government tries to fight on these two fronts?
Well, we're going to have a crucial meeting of the government's crisis committee, which is called COBRA. That's going to happen later this morning. It's pretty rare for them to have unscheduled meetings, so I think that just shows the scale of the sense of chaos now in the United Kingdom with this sudden emergency, as you said, lockdown slapped onto London just days before Christmas. All of these plans for restrictions being relaxed, ripped up over the weekend. and people scrambling to know what they should be doing with themselves the next few days. Added to that, we've had countries from across Europe banning travel from the UK, so people's travel plans in chaos. And then increasingly this morning, lots of concern about supplies. Of course, the port of Dover closed. 20% of food and goods consumed in the UK come through that port. And again, we're just a few days from Christmas, and that has been shut. So queues of trucks up the motorway up from Dover, adding to this morning. So we're going to have to wait to see what the Prime Minister has to say later today. What sort of plans can they put in place? But really politically very difficult for the Prime Minister as well. A huge reverse of policy. And again, just a week and a half before we exit the EU single market, and still no trade deal in sight with the European Union.
David, thank you for the moment. That's David Merritt, Bloomberg's senior executive editor. Well, Europe has been quick to react, with a number of countries banning inbound flights from the UK to try and halt the spread of the new strain of the virus. Germany, for example, is in the middle of a delicate Brexit negotiation, and they're among those to halt arrivals from Britain. Then you've got France. They suspended inbound travel from the UK for 48 hours, and then Ireland has banned flights until Tuesday, and a cascade of other countries have followed. Bloomberg's Maria Tadeo is in Brussels. Hey, Maria, you couldn't make this more complicated if you tried. Well, it looks like we have a bit of an issue there in the line. We're going to try and reestablish communications. Maria Tadeo there. Coming up, we hear from our interview with Dr. Soumya Swaminathan, the chief scientist at the World Health Organization, that as the UK struggles to contain a new mutation of the virus that's more contagious. That's next. This is Bloomberg. You're watching Bloomberg Surveillance. I'm Yusuf Gameluddin in Dubai. London and southeast England then are in an emergency lockdown over Christmas. Soumya Swaminathan, chief scientist at the World Health Organization, says that UK scientists, they're working with the organization on the new strain that is spreading. She told Bloomberg's Anne-Marie Hordern that there is currently no indication that the vaccine treatments won't work on this mutation.
It's really important that we study the impact of these mutations, particularly when it starts becoming a dominant strain. We've seen this happen before with other strains, where they arise and then they slowly take over and they become the dominant strain. Perhaps they have some advantage which allows them to spread. But I think the bottom line here is really that the interventions that are needed to prevent the spread, regardless of which variant it is, are the same. And I think that's key, and that's where we should be focusing, while scientists are still doing the lab experiments to figure out what are the implications of this new variant. Does it really enhance transmissibility, as has been suggested? Does it really prevent antibodies from binding to the virus? And will it have any implications for vaccine efficacy? These are still questions that scientists are hopefully going to answer in the coming days and weeks.
How long will it take, Dr. Swaminathan, until we know this variant's response to the vaccines?
I would say that it's going to take, a couple of days, if not a week or more, because there are several experiments that need to be run. And because this is, it's such an important question, it needs to be addressed properly. And we have to let the science and the data drive us. So what needs to be done is experiments in the laboratory where this strain of virus is cultured, and then it's exposed to neutralizing antibodies from people who have either had natural infection or people who've received the vaccine in a clinical trial, perhaps, and who have antibodies that were, vaccine-induced. And so when we do those experiments, then we will know whether we can actually neutralize the strain of virus just like you neutralize any other strain of the virus. So we need to wait for those experiments to be done.
Is this new variant unique to the United Kingdom?
Well, the largest numbers of genome sequences of this variant have been described from the United Kingdom. There have been some reports from other countries like Denmark, the Netherlands, I believe Australia has one case. But again, we need to keep in mind that the UK is probably sequencing much more, than many countries. And so it's not really easy to compare. Similarly, South Africa, within the African continent, there are huge disparities. South Africa does most of the genome sequencing on the continent, and therefore they are describing a variant as well that's recently seemed to have become much more prominent. So again, a lesson is more countries need to do more sequencing and deposit it in the public databases that we have now for sequences like GISAID or the GenBank and so on, so that scientists can actually compare, look across countries, and also look at the timelines of how these strains have been evolving. So yes, at the moment, most of these strains have been described from the UK, but I think we have to remember the caveats that I just mentioned, and perhaps if we look harder, we might find it in other countries as well. It's really important for us to keep track of the virus as it evolves, because it's so important for treatments and for prevention, for vaccines, for monoclonal antibodies, and so on. And it's very normal for a virus to behave like this, So all viruses do. It's just that there's so much of focus and interest on this virus. I mean, the influenza virus mutates much more rapidly than the SARS-CoV-2 virus, and that's why every year we have to redo the strain selection for the flu vaccine for that particular year, and WHO coordinates that. So these are all possibilities in the future that we need to consider for this virus as well. But at the moment, I think there is no indication that either vaccines or treatments will not work. Viruses, as they come under pressure, as you start using drugs and vaccines, viruses evolve to try to avoid those. So that's the natural evolution. But at this point in time, I don't think we have any evidence to suggest that the vaccines under development, or for that matter, the monoclonals, will not work for the majority of people.
Soumya Swaminathan, Chief Scientist at the World Health Organization. Well, Europe has been quick to react to the lockdown in London, with a number of countries banning inbound flights from the UK to try to halt the spread of the new strain of the virus. Germany, which is in the middle of a delicate Brexit negotiation, is among those to halt arrivals from Britain. France has suspended inbound travel for 48 hours. Ireland has jumped on the bandwagon. Let's get back out to Maria Tadeo. We have tried and patch up the line. That's the beauty of live television. She joins us from Brussels. Maria, again, talk me through what kind of forces are at play this morning on the ground over there.
Yes, well, you've seen very swift action, as you said, in 24 hours. A growing number of European countries, including all of the major big ones, Italy, Spain, that remain the only exception, I would say, but Italy, Germany, France, and so on, deciding they're going to restrict the access of UK travelers into the European continent. Spain, as I mentioned, is the only big exception at this point, and they say that, if anything, the reaction to this needs to be coordinated at a European level. If every country decides to take European action and ignore that to unilateral action, then you're going to see big disruptions on air traffic. And this is a time of the year that, of course, is always very busy. There's people trying to make it back home. Now, the Europeans are saying that they're taking these measures and they're taking action because they were concerned about that press conference that the Prime Minister gave on Saturday, in which he said, we have identified a new version of the virus that spreads much quicker, and that triggered many alarms in Europe. They say that they didn't get the data that they needed, and they're doing this as a precautionary measure to say, well, if you're putting your big cities on lockdown, then we need to do everything that we can to protect our citizens. And I would also note that this is not just about air traffic, it's not just about planes, but you're also looking at the Eurotunnel that connects London to countries like France, Belgium, and the Netherlands too. But also when you look at lorries that were supposed to enter continental Europe, the French have decided to block that for 48 hours, and that could see real tensions at the border in the UK if that continues.
Just a line hitting the Bloomberg, another country getting on the list of those that are restricting, suspending, or completely halting flights from the UK. India is to suspend flights originating from the United Kingdom until December 31. So another important player in global aviation deciding to put this one on the back burner there. Maria, just one more follow on the impact all of this is likely to have on the Brexit discussions.
Well, Yusuf, the reality is that we have 2 weeks until the UK possibly could crash out of the European Union without a trade deal in the WTO terms. We have already seen heightened uncertainty because of the paperwork that could involve, because of all the legal uncertainty that a lot of businesses are having to operate with in both sides of the channel, the UK and the European single market too. And of course, there's the politics that are coming into play here. The Prime Minister is becoming under scrutiny, is becoming under pressure for U-turning on that Christmas lockdown in London, but also when you look at the European reaction, and I look at all the European newspapers and the media today, Brexit doesn't get any coverage. But the image that is coming out of the UK is a country that, frankly, at this point is in big trouble, is in big chaos, whether that strengthens the European negotiating position or not, whether they decide to look at this as two separate items. What is clear is that there is pressure building on the Prime Minister whichever way he wants to go, whether that means a deal or actually walk out with that one. The economic pain of that could be much more severe.
Maria, thank you for that. Bloomberg's Maria Tadeo in Brussels. Let's stay with the coronavirus impact, because the chairman of the Dubai-based property developer, Damak, says that as difficult as the year has been, 2021 won't be better as the market still faces a significant supply glut. I spoke exclusively to Hussein Sajwani about the outlook.
How things are in Europe and other parts of the world, it's very scary. And this is something no human being has a control over. This may come back much stronger or may just suddenly disappear. The good news that we have now found a vaccine for that. And hopefully the vaccine will work. Again, those are medical things. We hope it works. And I really pray that the vaccine works and we see better to 2021. The challenge going to be in 2021 that we don't see a little improvement and then we start dumping more supply. And that's the risk. I hope we don't start, the big developer don't start dumping supply just because they can sell another few hundred villas or apartments. We are very, very careful in Damak, and I can assure you we're not going to bring new products in the market. Very small, minor, maybe, few hundred or less than 100, here and there, just to keep the momentum going. But we very, very strongly believe next year is going to be a challenging year, and we will not bring new products, and we have no intention of expanding because situation is still does not look rosy at all going forward.
Also, Hussein Sajwani, the chairman of Dubai-based property developer Damak. I want to get back to the markets because the sell-off is accelerating once again, and it appears that the decision by Indian authorities to stop and halt flights from the UK is part of the reason behind that. As more and more countries decide to add restrictions, the market and investors get more and more nervous. On the Stock 600, we're down 2.5%. U.S. equity futures were called lower across the board, a bit over 1% on the S&P 500, meaning look at the U.S. dollar, currently just about 1% higher, 1,134 points. That is a very big move that we haven't seen for the most part of 2020, that kind of one-day pop to the upside. And then Brent crude getting it another knock lower, so we're at 49.83. That is below the key $50 a barrel mark. Let's flip the board. Some of the other assets in play and on the move. This is what is defining the broader picture. It includes gold, up 1/5%. Cable, it just doesn't appear to stop over the last hour. We're now 2.3% lower. That's at 132.15, and we've spoken about the perfect storm, about the double whammy. And then dollar NOK as well, they're up about 2.3%. We're going to break all of this down in plenty more detail. This is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, and politics. This is Bloomberg Surveillance. I'm Yusuf Gameddine in Dubai. Tesla is in focus again, as it was earlier on in the hour. It is losing ground, falling by about 5.2% in pre-market on what is the first day of its S&P 500 inclusion. Shares are up, 730% this year in anticipation of this historic inclusion. It is the biggest company ever to be added to the benchmark. But at the moment, the pre-market suggesting a little bit of pressure here in what is broadly a negative market, because it is all about the pandemic and about new restrictions that are being implemented. country by country appears to be following suit in terms of restricting flights from the UK. We had moments ago India. Now we understand the Israeli Prime Minister is seeking to close borders to keep out the COVID mutation. So that just coming through as well. Let's stick with that main story. Everything from cable to stock and oil, they're all weaker this morning, hit by the UK's increasing isolation from the rest of Europe, from the rest of the world. Joining us to dig deeper through the market reaction is Bloomberg's Danny Berger. Danny, are the markets telling us here that the new COVID variant is a sort of a shorter-term concern, or is this going to be something that more profoundly characterizes 2021?
I think if we break it up into different assets, stocks certainly haven't completely retraced a lot of that return to work, return to normal life trade. Yes, we are seeing a really big impact to travel stocks. IAG, for example, one of the worst performers on the stock 600. But we haven't totally given up some of the gains it's posted over the past couple of weeks when value came back with hopes that we'd get more openings with the vaccine. The issue now at stake is the vaccine is a story for later in 2021. In the meantime, we might be getting more lockdowns, more travel restrictions globally than had initially been anticipated by markets in the first quarter. Sterling, though, perhaps a different story. Hard hit, falling by as much as 2% at some points more today. It's only fallen by more than 2% two other times this year. This is a 2 sigma move. It definitely is not something we normally see from sterling. The concern here, especially at the time of year we're at, do you really want to be holding on to cable when there are thin markets, there's illiquidity, and who knows when we'll get this trade deal finally done and dusted. In the meantime, the UK economy going to be hard hit by these new restrictions.
Spot on. In the meantime, the U.S. is in the process of formalizing this agreement on the stimulus. Is that going to be sufficient to really offer support, maybe even to lift sentiment once more details come out?
Well, it so far hasn't been enough to overshadow what's happening in the UK, but I really fear to think what markets would have looked like if we hadn't had this stimulus progress. I think at the same time, though, it's not enough. It's really not enough to stave off, again, some of the hit that this reflation trade will take. If you look at what's happening of U.S. futures, yes, they're less hard hit than what we're seeing in Europe, but what's really lifting them is the mega cap tech. NASDAQ futures are more about flat today, so that's what's really providing support in the market. It's that return to momentum, return to growth at the sake of value. And that's a classic trade we see when we get those virus concerns, when we get concerns about the economic damage to further restrictions, Yusuf.
Danny, thanks for that. That's our markets reporter, Danny Berger. Well, Bloomberg surveillance continues in the next hour as we flesh out the conversation around the perfect storm, the clouds that are gathering around the UK, and the coronavirus. This is Bloomberg.
another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
This morning, chaos at Dover, chaos in London, as Hancock says, quote, "This is deadly serious." Ireland, it bans flights from England. Eurostar, well, they were on a one train a day. Well, they go to none right now. A government official says, think, quote, something like March. After 3 temporary fundings, McConnell and Pelosi, they have a deal. Biden considers $900 billion a quote down payment. America's poverty rate, meanwhile, increased 26% in November. And the real yield, well, it moves real low, nearing all-time negative rates. Sterling challenged today as well. Good morning, everyone. Bloomberg Surveillance, Tom Keene in New York, with Lisa Abramowitz in New York as well. It will be an interesting, eventful 4 days here, Lisa, as we stagger to the holidays. And really front and center this morning, Lisa, is this unfolding story within the United Kingdom and, quite frankly, across Europe.
Yeah, frankly, this is a story that just encapsulates 2020. A mutated virus destroys Christmas, and that seems to be the mood over in the United Kingdom as people look toward a more viral, a more virulent strain here that we're seeing.
Well, the strain is a big shift, folks. For those of you just catching up with the story, we show Brandenburg at Berlin here. There could be any other airport in Europe as people are really trying to figure out what to do. St. Pancras, the Eurostar, really chaotic this weekend. This is a movable story. David Merritt and Maria Tadeo to join us here in a moment. But I really want to focus, as Lisa does, folks, this is on a new variant of the virus. We are thrilled that Paul Hunter will join us later in this hour, truly expert on virology. Let me look at the data right now. Lisa's looking only at things moving out 12 standard deviations. It's a busy day here. Futures not doing it, negative 46. They have worsened dramatically. The VIX says it all, up 5. That's not a typo. Let's go to the second screen, Matthew. Come on, Matthew, wake up. Get off the ski slopes. Let's go. Futures up 5, VIX up 5 rather, 27.09. That's a huge big figure move in volatility. That wrapped around the virus, wrapped around what we see in the pandemic, and maybe some stimulus news in there as well. I do want to note the 2-year yield gave me a 0.10 momentarily. The real yield now negative 1.08. And you got the VIX. Show me the VIX chart if you can, Matthew. You're killing me. This is just too much on a Monday morning. There's a spike up in the VIX, moving from the 20 level over the last 20 days up to a lofty 27.18. Lisa, it's too early in the morning for you to do a data check. What do you have?
Well, you said that it's too early, and yet I'm going to defy you, and I'd give you one anyway. A real deterioration in the tape ahead of the open here in the S&P futures. Yeah. You can see down now 1.3% really over the last half hour. Now dropping, well, it had been dropping quite a bit more. I guess it has retraced a bit. The FTSE 100 down 2%. The concern there about the virus and what that means in terms of both the businesses within London, some of the other urban centers, as well as mobility. Crude down the most since November, since early November, a real deterioration here, 5.4%. This is a mobility issue. And the dollar actually seeing one of its best days in months at one point since September, which is kind of compelling this whole flight to quality trade given the consensus that it will weaken. Also want to point out Tesla. This is the first day it's included officially in the S&P, and it's down 4.6%. It sounds like a lot, but considering the 700 gazillion% increase that we've seen in Tesla, Tom, not exactly taking that much sheen off this stock.
Very good. It is an eventful day. We, of course, will have stimulus talk out of the U.S. and that successful agreement overnight. But right now, we consider this serious mess in the United Kingdom. Maria Tadeo will join us from Brussels here in a moment, but we are thrilled to bring you this morning David Merritt, Bloomberg News Senior Executive Editor and truly experienced on the logistics and how it links into the government as well. David, there will be a so-called Cobra meeting today with the Prime Minister. What does the Prime Minister hope to accomplish?
Yes, right. We'll be waiting to see what comes out of that meeting. The Cobra committee only really convenes at moments of national crisis and emergency. So it just shows you the level of this real sense of chaos that is engulfing the country here this morning after a very dramatic weekend with, first of all, the admission that this new strain was ripping through London and the southeast of England at an alarming rate, an emergency lockdown in the capital city with shops closed and people told to stay at home. And then over the weekend, European nations lining up to shut the doors on travelers.
The constraint, David, in the United States is hospitalizations. Is the real constraint for the government not travel to Ireland or travel to Israel? Is the real constraint for the government hospitalizations?
Well, so far, hospitals have held up to this pandemic, but of course, that is a big factor in this emergency lockdown in London. Suddenly, they were seeing those hospitalization rates shooting up. We still do have these big overflow hospitals that they could call on. So far, the health system is bearing up. But, we're just coming into January and February. These are the worst months always for the health service. And if the beds are filling up already, people are starting to really panic about what things might look like in just a few weeks' time. So that's part of the decision. But also step back a bit and consider the bigger context here as well around the Brexit talks. They're still not resolved. We are less than 2 weeks away from Britain crushing out of the European single market without a deal. And the spectre of things like food shortages. Remember, back in March, we had people panic buying supplies. Now we have them worrying about the virus adding to the Brexit concerns over supplies, and people really worrying that there's going to be problems with food and, crucially, medicine as well. And remember, the vaccine, which is being rolled out, is coming from Brussels, it's coming from Belgium, and made in Germany as well. So if there's any interruption to those supplies, that is only going to add to the government's enormous headaches over this Monday.
Well, Maria Tadeo is over in Brussels. Maria, what is the sense with respect to trade? David was painting the health picture here. How much has trade in the supply chains, how much have they been disrupted?
Well, Lisa, it's still, I would say, very early to say, but in terms of what this means, it is nothing short of a diplomatic earthquake. When you get countries like France, Germany, Italy, Belgium, the Netherlands, all of them in the space of 24 hours telling you we're not accepting your flights, we're going to shut down the Eurotunnel. This is very, very symbolic. The fact that you can't get on the Eurostar from London to go to Paris, Belgium, the Netherlands, I mean, this is big. And also the idea that we are potentially going to see big queues, especially in the ports in France, because they've restricted, as you know, also merchandise and stock and lorries entering the country from the UK for 48 hours. What I would also say, Lisa, and again, going back to what David just said when it comes to Brexit, this morning, when you look at the European press, when you pick up any newspaper, what they say is this is a country that is isolated now from the rest of Europe. It's a country in chaos, and this is happening just 2 weeks before we head into a big hard deadline, December 31st, as to whether or not there's a trade deal. The picture that the Prime Minister was hoping to give to the world, global Britain, we're going to thrive. Well, that's not the impression from a European perspective. When you're waking up today and you see this as a country, as I mentioned, that is isolated from everyone else.
David, talk about from the British side the idea of how much the latest chaos, as Maria was talking about, infects any discussion of Brexit. How much does this interfere with that deadline, or do you see this being preeminent as far as the priorities here and with people looking to avoid hard Brexit?
Yeah, well, the Prime Minister has been really concrete in this hard deadline, saying that we're not going to extend the transition period. But, this is really is now a sense of emergency. And we've got Nicola Sturgeon, the First Minister of Scotland. She is calling now this morning for an extension to those talks, saying it is madness to force a hard Brexit on the country when it's going through this surge of the pandemic. For now, the government is holding firm, but you can expect that to be discussed at the COBRA meeting today. How are they going to juggle these two emergencies converging at the same time? If people start to see shortages of food or even worse, medicines in the shops at the same time as hospitals filling up, you can bet that the government is going to take a huge political hit from that. So they're going to want to try and diffuse the situation. Does that mean they actually make a compromise and get a deal? That's the other thing. The two sides are talking, but it's got to happen soon. Otherwise, there's no chance of anything being ratified by the end of next week.
If you're just joining us this morning, folks, Lisa Bramwitz and Tom Keene, Bloomberg Surveillance, literally a special edition with massive shutdown in the United Kingdom, an exceptional market reaction. The lorries, as they say, I'm sorry, they're trucks. The trucks lined up at Dover here across to Dunkirk. They are not happening today as European truckers desperately try to get home. The VIX has deteriorated out to a 28 level moments ago. Futures negative 57. Maria Tadeo, it's real simple. With this pandemic, with this new strain of this virus, is there a risk that UK shutdown forces Europe into recession? Is that part of the calculus?
Well, Tom, it is part of the calculus. And for the Europeans, again, very much stressing this morning that they've always said, to some extent, we negotiate from a position of strength. To some extent, we are much more coordinated than the UK would be, and that is now being reflected in the situation to the extent that you have one country, that's the United Kingdom, shut down from everyone else. And Tom, I just want to really stress, because this is very symbolic, the idea that the French have shut down the Eurotunnel. I mean, I know this may not seem like a big deal, but it really does is. It's that symbol of connecting the two big capitals, London and Paris. What I would just say very quickly, though, some of the virologists I've been speaking to this morning, they actually say that the United Kingdom, to some extent, does much more testing and sequencing. And this may not be that this is unique to the UK, but we could see this in Europe in a few short days if that sequencing is proven right, that the virus may already be here, Tom.
Maybe the most important point of the last 7 minutes from Maria Tadeo here on the inaccuracies and the mistakes made in cases and in testing as well. We'll see how this unfolds over the next few days. David Merritt and Maria Tadeo, thank you so much for joining us this morning. Again, futures up 7, 28.10. The bid falling away in the markets. S&P futures negative 57. The VIX 28.10. As I suggest, we're watching yields come in as well. With our first read news in New York City, here's Ritika Gupta.
Morning, Tom, Lisa. Lawmakers won't have much time to review a $900 billion economic stimulus plan that congressional leaders have agreed on. Both the House and the Senate are scheduled to vote on it today. Most Americans would get a one-time $600 payment. Revealed there would be a $300 a week in enhanced unemployment benefits through March. And the Paycheck Protection Program would get $284 billion. That includes forgivable loans for small businesses. President Trump's campaign is turning to the Supreme Court again to challenge the election result in Pennsylvania. It's filed another long-shot appeal aimed at overturning 3 separate decisions from Pennsylvania's highest court. The Supreme Court has already rejected 2 efforts to overturn Joe Biden's victory in pivotal states. Brexit negotiators are still hung up over fishing. Talks between the UK and the European Union on a trade deal missed another deadline. There are few signs that either side is ready to compromise. The 2 key disagreements are access to British fishing waters and limits on state subsidies for business. And a CDC advisory panel says that the elderly and frontline essential workers should be next in line for coronavirus vaccines. Those frontline workers include firefighters, teachers, and grocery store workers. The first round of vaccinations is going mostly to healthcare workers and residents of long-term care facilities. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Lisa.
Thank you so much, Ritika. Coming up, we're going to be talking about what could be the beginning of a pain trade. We're looking at a dollar spot index, the Bloomberg Dollar Spot Index, having its best day since June. We're seeing a real deterioration of the tape across the board with equities. Up next, Dominic Bunning joining us, HSBC Senior FX Strategist. This is Bloomberg.
changed as a leader since that day in 1993 when you joined Roche?
You develop over time, and it's a series of experiences which hopefully make you a better leader.
Bloomberg Surveillance. I'm in New York. I'm Lisa Abramowitz alongside Tom Keene. Francine Lacroix is off. I want to bring you these breaking headlines right now, just crossing the tape. The NASDAQ is investigating connectivity issues to the exchange for some clients. We don't have more information, but it is an emerging story. Just want to give you a sense. NASDAQ futures down about 0.9%, Tom. Not necessarily down as much as S&P futures. We'll bring you the latest.
And we'll bring you also the data checks here. Lisa and I watching futures deteriorate, negative 56, Dow futures negative 380 down to 29,730. More than anything, we're looking at the VIX, 28.10, balloons out 6 big figures. That's a huge, huge move in the VIX. That's a massive reset. We'll have to see how that settles out towards the U.S. Open. And I also want to show sterling right now. Stay on that board, Matt, if you would. 132.10 on a weaker pound sterling. And folks, what the pros do is they look at, in this case, sterling out 4 digits, which is called pips. P-I-P-S, like Gladys Knight in the pips. So sterling is moving 310 pips right now, a big 2% move. That's a good setup to get into Dominic Bunning. He's with HSBC and their senior FX strategist. Dominic, on a morning like this, what do you do when you've got such an emergent crisis away from FX? What is the strategy? To be opportunistic, or do you wait?
Look, Tom, you mentioned Gladys Knight and the pips. I think sterling at the moment looks like it's on a midnight train to zero rather than a midnight train to Georgia. But look, I think now is never the time to panic. Look, I think when we look at it in our seats, we try and take a slightly medium-term view. And we've been warning clients, we've been warning people we speak to for some time that the rally that we have seen in sterling up to this point, or up to the last few days, was driven not by optimism around the UK, but by global optimism. And that is a potentially very weak ally. So sterling's been completely dominated by these external forces. Suddenly, you get a domestic story, and that really shows you just how vulnerable sterling is. And that's something we've been trying to warn people for some time. Sterling has not really been reflecting its own domestic vulnerabilities. When you start to see these stories, it just shows you that even in a medium-term context, sterling is likely to underperform those places with much better economic fundamentals.
In a time like this, Dominic Bunning, you know this so well, there's a certain amount of media hysteria and different stories. When you sit down in front of the Bloomberg today, how will you link in FX dynamics to what you see in the case of the UK, the gilt market?
Well, actually, it's really interesting. If you look at the relationship between gilts and sterling, for the last year and a half, they've barely been related at all. They've had almost a zero link. And that's what I'm talking about. When I talk about sterling being driven by external drivers, the UK has been massively highly linked to US equity markets, for example, to the VIX that you've been speaking about. It's not been driven by UK rates. UK rates are basically at zero. They're not going to move much. Maybe they go down a little bit. Maybe the Bank of England is forced into something more dramatic. But actually, that story is pretty much done. So I think sterling is a much better barometer almost of what the market thinks about the UK than the rates market. And I think right now, the FX market is telling you sterling looks vulnerable.
Certainly, sterling has a lot of challenges with respect to the domestic economy. And yet, throughout the year, a lot of the FX story globally has really been determined by the dollar. When the dollar is having a bad day, everything else is having a good day and vice versa. Today, the dollar, if you look at the Bloomberg Dollar Spot Index, is having its best day since June. People going to quality or perhaps just the classic haven. How much is that underpinning all the moves that we're seeing, whether it's the euro or sterling and beyond?
I think the dollar is going to be the safe haven currency of the world, alongside really the Swissy and the yen for as long as I'm in this job, that's for sure. But as long as pretty much any of us are going to be around. And the point is that the dollar offers you depth of liquidity. It offers you that access to treasuries. And those things don't disappear overnight. So look, I think the dollar has just been that pure risk-off trade, and it's obviously been hurt by that in the last 6 months when there's been lots of optimism. But I do think that status of the dollar being that safe haven, it's not going anywhere anytime soon. If you believe in 2021, we get through this short-term sort of panic almost that we're seeing, and you do start to see that brighter future in 2021, which is what we do expect, then I do think the dollar will come under some more pressure again. But you know, the way markets work, when you start to have this this significant decline in risk appetite, the dollar's always going to do well on days like that.
We're going to come back with Dominic Bunham here at the half-hour mark as well. Huge news flow and a true deterioration now continuing in the markets. Of VIX, 7 big figures, 28.58, and S&P futures give away as well, negative 55 down to negative 66 right now. This is a 1.8% move on SPX. NASDAQ does a little bit better, but markets, frankly, are really quoted. Let me stand corrected, 1.8% move on the S&P 500, 1.5% on the Dow. In the next hour on the markets on these tumultuous times, Michael Darda, MKM Partners. Stay with us. Lisa Abramowitz and Tom King. This is Bloomberg. Good morning.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus is going to be in order to really begin a more equalized economy.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
Bloomberg Surveillance. Good morning, everyone. Lisa Bramowitz and Tom Keene. Markets on the move and falling. Futures up, VIX up 7, make it 8 points, 29.11. That is a ginormous move on the VIX with futures at negative 73. We can stay on the equity market, but I'd really focus on bonds now giving away. This is price up, the demand into bonds with yield down. I'm watching the 2-year more than anything to 4 digits, 0.1109. And we did have the 2-year go to a 0.10 print as well. Massive curve flattening, and the real yield breaks down. No other way to put it, negative 1.09. I'm going to let Lisa beat to death foreign exchange for you, other than to say even Swiss franc shows strong strong Swiss even against the euro as well. Lisa, what do you see?
Well, the sterling is really what you highlighted, really important to note, and just want to bring you this. Ireland's Simon Coveney saying that Brexit talks are not in a good place, that fishing still is a hurdle to the Brexit deal, and the EU has gone well beyond opening offer on fish. It's unlikely a Brexit transition will be extended. So in addition to what we're seeing with respect to the COVID virus, we're also seeing issues with respect to Brexit, Tom. We will discuss that coming up. We're also going to be talking with Gerard Cassidy, RBC Capital Markets, head of U.S. Bank Equity Strategist. This is Bloomberg.
The biggest hurdle we've had to face is the fact that we just can't see our customers. Traditionally, we would be away 4, 5, maybe more times per year on what we call trunk shows, where we visit cities all over the world to see our customers. That's not been able to happen this year.
COVID-19 pandemic has hit the U.S. economy hard.
But the damage has not been evenly distributed.
Now comes the challenge to rebuild more equitably. Join us for a Bloomberg special report, The Unequal Recovery, on Bloomberg Television.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Bloomberg Surveillance. Good morning, everyone, worldwide. Terrific news. So Lisa Bramowitz and Tom Keene in New York, and the markets are deteriorating more than anything. I'm just watching the VIX, the S&P 500 volatility measurement, and sort of Dow 10,000 on the VIX. is a 30 level. We approached that at 29.63. We are 8 big figures out with S&P futures negative 80, a 2.2% move. Dow futures negative 580, a little bit behind that. Even NASDAQ 100 having a challenging day. Yield comes in as well. Price up yield. I'm watching the 2-year U.S. yield more than anything, and it now officially collapses to 4 digits, 0.1068. And Lisa Bramwitz, we're just simply going to have to follow this as we get very near a 30 print on the VIX.
Certainly the news has changed. There has been a change in tone with respect to the new strain of the virus, with respect to Brexit negotiations. But there also is a question of positioning. We're looking right now at an ongoing deterioration. When you look at currencies, the dollar in particular,
look at the dollar,
now, Bloomberg Spot Index now having its worst day since March. Absolutely, or best day, excuse me, since March. Absolutely surging. And I do wonder how much of this is a result of crowded trades. The idea that there was the biggest short position ever heading into this on the dollar, expecting it to weaken. How much are those shorts being forced out of their hole? Dominic Budding still with us, HSBC senior FX strategist. How much of what we're seeing in the potential volatility here is due to very crowded positioning?
Yeah, absolutely. I think it's 100% one of the key reasons. It's that, and relatively thinner liquidity going into a normally quiet time of year. Our own measures of positioning alongside more sort of widely used stuff on the IMM, they're all showing that dollar shorts are very popular. If you look across the headlines, consensus trades going into 2021 are to sell the dollar. I'd remind people that that's been the consensus view for pretty much every year for the last 5 years, though. So positioning, it's going to be a short-term maneuver. It's not something to think about for a 6-month horizon.
We're going to follow this through the morning, folks. Breaking news here clearly is the emotion of the VIX, the S&P 500 index, now through a 30 level. That's always a big deal. Lisa?
Well, Dominic, just to follow on with what you're talking about and the moves that Tom is highlighting, if this is a short-term issue, does that mean you want to go against it, that you want to dive in and perhaps either short the dollar, sell the dollar, buy sterling, go against the consensus trade that's getting unwound in short order here?
I'm not sure I'd be wanting to do it against sterling. I think sterling remains one of those currencies where there's so much domestically that's challenging that I wouldn't necessarily want to fight it too much there. But I think this does create opportunities in places like Australia, New Zealand. These are economies which are very robust. They've got a very strong likelihood of having a good rebound through the course of 2021. And these currencies, I think, can actually have a good 3 months, 6 months, a year ahead. So look, if I was going to, fight this move, I'd be looking to play long Aussie, long Kiwi, rather than play long sterling. I think there's still too much uncertainty and volatility around what's happening in the UK, around Brexit and all of those other things.
Well, where's the opportunity here? I mean, if Looney is a 127 and weakens out to 129, you're supposed to catch the stochastic knife in the dark and jump in. Do you jump in with Pacific Rim? Do you jump in with EM? What's the choice set when you finally get the courage to move?
Yeah, I mean, you're right, Tom. It's obviously, you're catching the falling piano when on days like this. But if you're able to wear a little bit of pain, like I say, I think a lot of those Pacific Rim kind of currencies in G10, Australia and New Zealand, we like. In the emerging markets, more Asia generally. Those are the places which have seen the better growth outcomes and where we expect to see those stronger outcomes through the course of 2021. There's a couple of opportunities in CEMEA too. Russia, Turkey, now that they've had a bit of a policy rethink there. I think some of those currencies also look attractive.
Dominic, I don't want to get you in trouble with Janet Henry, but let's try. It's so close to Christmas. She'll love it. Are we talking negative rates in the United Kingdom?
No, we don't think so, for a short answer. I don't think the Bank of England wants to, particularly. I don't think right now it would necessarily do much good. But the problem that the central bank faces, and that any central bank faces, is that, when you've only got a hammer, every problem looks like a nail. And that's where the Bank of England might find themselves, that they've used QE, they've only really got potentially interest rate cuts left. And if they need to do more loosening in 3 months' time or whatever it might be, they kind of get pushed into that corner. So look, I don't think it's their preferred option. I don't particularly think that negative rates are a great solution. I'm not sure there's great evidence they really work. But if the Bank of England feels it has to do something, there's not much else it has in the locker. It can do a bit more QE, but if it really gets worse, then maybe it's a possibility.
Dominic Budding, thank you so much for being with us of HSBC. Just to bring you up to speed here, we are looking at a tape that's deteriorating across the world as we look at the virus getting worse, as we look at the possibility of a hard Brexit, as people struggle with the reality of a Christmas destroyed by a virus that has destroyed all of 2020. Tom, I am struck. S&P futures right now, 2.2% decline. We're looking at the best day for the dollar so far, the Bloomberg Dollar Spot Index, since March, really raising a question of what has changed. We are getting some sort of stimulus effort in Washington, D.C. moving, but that's already been priced in, and now the reality is hitting people.
Yeah, I would suggest, folks, and I'm editorializing here, but stimulus pushed aside by the enormity of the shutdown of the United Kingdom. Lisa, you've got your favorite benchmarks on the terminal. Mine, folks, is the German 2-year. I learned that from John, what's his name, John? John?
Taro,
yeah, John Taro. He told me about the Germany 2-year. I'm watching the Germany 10-year this morning reverse and go to an ever greater negative. It is not through to where it was the first week of November, but we're watching those big negative continental rates as well. In the United States, I'm watching the U.S. 2-year. It's supposed to be immovable. It's not my prediction, but it's one of my great calls that of interest this year, folks, will be a 2-year yield that will not just be like a rock pinned by Mr. Powell. 0.1089 on the 2-year yield gets my attention. Lisa, what else do you see?
Well, the 10-year yield, if you're talking yields now, collapsing to 0.88%. The idea here, Tom, when you look across the board, is that the consensus trade of reflation of a better 2021 is getting squeezed out today. And there is a question of how far that squeeze can go, given that we were looking at one of the most crowded markets ever in recent history. And I do think you can't let that go. Here you could see 30-year yields also coming into 1.6%, some curve flattening, also, again, defying the consensus, Tom.
Yeah, a little bit of a handle here, 29.60. We finally got a little bit of stability in the market, but it has been an ugly hour. I do want to point the negative real yield, negative 1.0962 on the 10-year piece, and that is not a record low, but really getting there abruptly fast. We're going to continue to follow this. Stay with us on the markets through the morning. With our first word news, here's Ritika Gupta.
Thanks, Tom. Congressional leaders have reached an agreement on a $900 billion spending package to boost the economy. Most Americans would get a one-time $600 payment. There would be $300 a week in enhanced unemployment benefits through March. And the Paycheck Protection Program would get $284 billion. That includes forgivable loans for small businesses. Lawmakers won't have much time to review the measure. The House is set to vote on it today, followed by the Senate. U.S. officials acknowledge there will be a lengthy effort to determine the extent of a suspected Russian hack on federal agencies and private companies. Republican Senator Mitt Romney says Russia acted with impunity, and he says President Trump has a blind spot about it. The president has contradicted U.S. intelligence officials and suggested that China may be behind the cyber attack. Get ready for what one astronomer calls a spectacular event in the sky tonight. Saturn and Jupiter will be the closest they've been in hundreds of years, and the result? The Christmas star effect is said to be similar to the one that led the three wise men to the nativity scene. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom?
Ritika, thank you so much. It is distances unimaginable. I measure it by the distance to Mars, which is a lot more than the distance to the moon. Mars, almost the same distance as to the sun. Jupiter is 6 Marses away. Saturn is almost 11 Marses away. The distances are truly unimaginable. This goes back to 1226, not a few hundred years. Ritika nailed that. Medieval history with Ritika Gupta. This is back to 1226. This is the time of Louis IX, the great king of France, with all that he did for society. It is absolutely once in a lifetime, and this will be tonight if you are ever so fortunate to have clear skies.
Tom,
Lisa, was that enough astronomy for you?
I feel like we have to reset and let people people know they're still listening to Bloomberg Surveillance and watching Bloomberg Surveillance and not necessarily Astronomy Today. But I like it. It was great, Tom.
Did I do okay there?
It was fantastic.
BBC with a great animation of that. I'll try to get it out on social media today. We're watching the markets with some stability in a tumultuous morning. The shock of United Kingdom shut down 29.04 on the VIX. S&P futures at negative 72. On the United Kingdom, Jill Rutter of the United Kingdom in a changing Europe will join us next. This will be an important update. Stay with us. Lisa Abramowitz and Tom Keene from New York. Again, futures at negative 73. This is Bloomberg. Good morning.
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
This is Bloomberg Surveillance live from New York. I'm Lisa Abramowitz alongside Tom Keene. Francine Lacroix is off. A real question here as the UK enters the firing zone from all sides. Brexit deadline coming up, not coming up with an agreement. In fact, having some of the talks fracture, while also having to do an emergency lockdown due to the spread of perhaps a more contagious strain of the virus. Joining us now, Jill Rutter, UK in Changing Europe Senior Research Fellow. Jill, can you give us a sense of what it would take, what kind of emergency it would take from the UK government to shut down the economy at such a pivotal time for talks of Brexit, as well as the holidays? Can you give us a sense from your experience in government of what the mood must have been like to make this decision?
Well, it looks like they are saying they got a new assessment on Friday. There's some controversy about when they actually knew. But there's been increasing unease for the last couple of weeks that the Christmas relaxation that the governments had agreed was looking increasingly unwise as COVID rates rose again in the UK and hospitals were getting to points where they said we're at risk of being overwhelmed. So there was a sense, I think, in any case, that the government was dragging its feet. It spent last week resisting calls from people to say you've actually got to abandon your Christmas relaxation. So there's some sense that that was already there. And then I think when they finally got the evidence, they would say that there was this new, more transmissible variant. That's when they felt they had to act. But they did it in a way that sort of managed to then provoke mass panic. On Saturday evening in the UK, we had all those scenes of people clogging up train stations trying to get out of London to not have their plans completely wrecked. So I don't think it was that well handled. So.
Jill, absolutely thrilled to have you on. I was afraid the Queen was going to call up today and say, cancel Jill Rudder. We're afraid what she will say because of your many, many years and departments of experience within the British government. What happens in a COBRA meeting and what can politicians do about what is clearly a medical and natural disaster?
Well, so in COBRA is basically just the name for the briefing room. So it's like a situation room. We just like calling it that and that sort of things. So what they tend to do there, they, are basically deciding on a whole raft of measures. The interesting thing about COBRA is when you are really at the heat of a crisis is that there's what they get to call a battle rhythm of meetings. So, and a lot of time and attention is spent feeding ministers going in. You can get some operational people. They can involve the devolved government, other layers of government. And they're designed to make very rapid decisions and then to transmit them into the people who've got to do things on the ground.
Well, what do they do? What do they do to transfer to the trucks, the lorries, at Dover trying to get back to Europe? I mean, take one application of what do we do on a Monday morning, or in your case, on a Monday 12 noon. How are they going to move those trucks back to Europe?
They can't. I mean, they can redirect the trucks. Obviously, the trucks have drivers. They want to redirect them to other ports which have some connectivity. But the problem at the moment is what they're doing at the moment is they've implemented their contingency arrangement that they have for Kent, which they've used in previous times when there's been blocks the other side of the channel. This thing called Operation Stack, where they convert one of the motorways in Kent, so one of the like interstate highways, into basically a parking lot to try and maintain flow around the rest of the county. So they basically turned that into a car park. That's their sort of contingency plan. The trouble is that it's not the UK government that is stopping the trucks leaving the UK. It's the French government which has imposed this rule, and what they'll be trying to negotiate, I think, is some way. So people were talking this morning about, is there some way in which they can deploy some sort of rapid testing down to Dover to enable the port to reopen.
With breaking news, Jill, we've got to run along, but Jill Rudder, thank you so much for joining us. UK and a Changing Europe at King's College. Thrilled that she could be with us today. The London mayor making very clear he looks for an extension of the Brexit discussion and the Brexit transition. We've heard that from others this morning as well. I need to tell you about the markets. Futures negative 78, Dow futures negative 525, now a 2% move, 2.1% move on S&P futures. The VIX out 8 big figures, 29.35, and the yields where you would expect. Price up, yield down. Lisa noted gold earlier reversing. Huge round trip in gold now, negative $10. 18.79 an ounce. He has been quoted across United Kingdom media this morning, truly one of the experts on the transfer of a virus and the transfer of some blend of their mutations. We are thrilled to bring you from the University of East Anglia, Paul Hunter. We'll do that next. This is Bloomberg. Stay with us.
型にはなんと2万点以上、前進でついてます。なので2万点あることにより、その情報が取れない、平面がないんですね。なので全てをスキャンすることができるので。どちらにせよ自分のサイズを1回最初から、適正なものを発見してそれを買って、家に届いてきたらぴったり非常にハッピーというのがやっぱりしかるべき姿かなと思ってます。
We explore the trends, investments, and competition of the European ETF industry. Join us on Bloomberg ETF IQ Europe.
Bloomberg Surveillance. Good morning, everyone. Lisa Abramowitz and Tom Keene. Thrilled you're with us. Futures at -81, Dow futures -535, and the VIX 29.52. Worser 20 minutes ago, but I don't want to oversell that. Very difficult tape this morning. Dollar strength by 1%. DXY 20.89. Paul Hunter joins us now. The Norwich Medical School, quoted widely within the British press for his expertise here on virology in this moment with this horrific virus. Professor Hunter, there are glycoprotein spikes, those horrific spikes that we see out of this virus as well. How are the mutant spikes different from the spikes you've been studying since February?
Right. Well, there are actually a lot of different changes to this virus compared to what we were seeing in November. You're quite right. The spike protein, the thing that sticks out, that's important because it's what enables the virus to get into the new cells. I think to be fair, we don't yet understand why this particular variant is in fact more infectious. We know certainly that it is, and that it poses a substantially increased risk, but we don't at the moment fully know what at the molecular level is driving that increased risk.
At the molecular level takes us, Paul Hunter, back to our heroes such as Francis Crick. Is this crisis for experts like you a crisis of mRNA and DNA structure, or is it a crisis of the vaccine and its potential efficacy, or a risk to that efficacy?
I mean, the main crisis here is that we've now got an infection that is spreading much more rapidly than the traditional variants. And in fact, the thing that really got to me in the Prime Minister's presentation the other day was when he said that it increased the R value compared to the older variants by about 0.4. Now, in the national lockdown, we were at best able to get the R value down to about 0.7. So immediately, what this is saying is that the national lockdown itself was not enough to slow the spread of this virus. Yeah. We don't know yet for certain, but it looks like that these changes won't damage the impact of the vaccine. But people are working on that very intensely at the moment. But at the moment, there is no evidence that it will undermine the vaccine campaign.
Yeah, the lockdown, you're saying, the shutdown or the restrictive measures the UK putting in, not staving off the spread of this virus. You were quoted saying in a recent publication that this is so depressing, it will probably extend the pandemic and what we're experiencing for months. Can you walk us through that?
Absolutely.
Can you walk us through, how much you're going to see this prolong what we're experiencing right now and what we're going to have to do?
That's a very difficult question to answer. You know, it depends on how, on so many things that we don't get another even more infectious virus, that the vaccines do, as we expect and hope that they do, continue to work well. But 2 weeks ago, I was quite confidently saying that by the time we got to the end of January and through February, we would start to see relaxations in the restrictions across the UK in a sort of a piecemeal basis. I think that now is very unlikely. I think we are likely to see problems going on well into spring and maybe into summer.
Well, Paul Hunter, thank you so much. Your time's so valuable, and we look forward to speaking to you in the coming days. Professor Hunter with the Norwich Medical School of the University of East Anglia and truly expert on this horrific pandemic. Lisa, just as Professor Hunter was speaking, we saw a deterioration of futures, -100, and the VIX got almost out to 31. Market's still on the move.
Yeah, interesting to see that the stimulus that Washington seems to be coming to some agreement on, not priced in a dramatic worsening of the pandemic and this new strain. And what we're seeing across the board is a reversal of those consensus trades. Look at that. S&P futures now down 2.4%, and oil having its worst day in months, down almost 6%, Tom. Again, this idea of mobility absolutely getting crushed by this virus.
I'll put a plug in for my book of the year, Daniel Yergin's The New Map. It is absolutely wonderful on oil and our changing landscape there, and certainly Brent 52-ish, down 49.36 as well. In the yield space, it is exceptional. As you would imagine, it is price up and yield down. We are now at 4 digits, 0.8882 on the 10-year yield. I'm watching carefully the 2-year yield, which has broken a number of times below 0.11% for pros. That is a big deal. Please stay with us through the morning. We'll be doing much more data checks here with futures at -94. A perfect guest to speak to in these times, Michael Darda, in our next hour. Stay with us. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
It is possible
we could have negative growth if this resurgence gets bad enough and mobility falls off enough.
We knew that things were going to slow down after the bounce back in the third quarter, and you're seeing that in the data now.
We're going to be well into 2021 before there's some sort of equilibrium that we achieve.
This morning, chaos at Dover, chaos in London, as Hancock says, quote, "This is deadly serious." Ireland bans flights from England. Eurostar goes from 1 train a day to none. A government official says, think, well, something like March. After 3 temporary fundings, McConnell and Pelosi, they have a deal. Biden considers $900 billion a, quote, down payment. America's poverty rate increased 26% in November. And well, the real yield in the markets in absolute turmoil this morning. Futures negative 100. Good morning, everyone. Bloomberg Surveillance. Tom Keene in New York with Lisa Abramowitz as well. Extraordinary markets. We'll do more market checks, and we've got a perfect guest coming up in moments. Michael Darda with us. We'll look at the aviation question in the United Kingdom, and Kevin Cirilli with a Washington tilt just in the next 30 minutes as well. Lisa, just simply, what is your observation on markets on the move?
The stimulus was priced in, the fact that there would be some sort of agreement, a worsening pandemic that could potentially be extended by several months because masks and social distancing doesn't necessarily work the same way. That has not been priced in, and that is what markets are facing down, and that seems to be spooking things. And to me, Tom, I'm watching the dollar because this was the biggest consensus trade heading into next year that it would weaken, and we are seeing it strengthen the most since March as people try to unwind some of those trades on the worsening outlook that we got overnight.
Let's do the data now. Get you set for the morning. I'll let Lisa concentrate on the dollar. In FX futures, a negative 100 moments ago, down 2.5% on SPX, a negative 93. Dow futures, I saw a negative 700, now negative 680. The VIX is a story, a jump condition from 23-ish out to 27, and we've ballooned out near 31. 9 big figures on the VIX, 30.43 right now. In the yield space, I'm looking at 2 yields. I'm looking at German 10-year, which has clearly come in ever more negative, not out to new recent record big negative rates there, but getting there quickly. In the U.S. 2-year yield, 0.1109. I saw a 0.10 momentarily a bit. A chart of the VIX giving you that spike up as well. As Lisa mentioned earlier, oil back 5.4%. Lisa, on the dollar.
Yeah, we're seeing the dollar strengthen the most at one point since March. It's retraced a little bit of that gain. Really, if you look across the board with equities, it is a classic risk-off feel. The FTSE 100 leading the way down 3%. S&P futures at the lows of the session down 2.5%. And meanwhile, again, I'm watching all of the trades, the consensus trades get unwound. One of them, perhaps, is Tesla, because don't forget, Tesla rejoined the S&P today for the first time and is down almost 6%, Tom. That would seem like a lot, except that it's up about 700 billion percent so far this year. So this is basically pocket change.
Well said. I just really wonder if that's going to be a big move. We're going to see that board every day until we calm down. He was booked months ago. Michael Darda's with MKM Partners and synthesizes, I'll get it out, it's a Monday, 3, 2, 1. Synthesizes economics and markets wonderfully, always using the Bloomberg terminal, which is the only reason we have him on. And we are thrilled to get Michael Darda on in this tumult. Michael Darda, do you have to reassess global GDP dynamics because of a true pandemic crisis in the United Kingdom?
I don't think so, Tom. I think what's happened here is that, as Lisa mentioned, you had markets that have already priced in the stimulus bill that seems to be on the docket now. We had markets trading at pretty lofty valuations, a lot of good news priced in, very high retail investor sentiment, which is typically a red flag, at least in the near term for risk markets. And we've been getting bad news on the pandemic for some time, recently punctuated by what's going on in the UK with this new strain of the virus and aggressive lockdown. So I think that explains what's happening today. I don't think that necessarily explains where we're going to be in 6 or 9 or 12 months.
What part of the market can you be opportunistic in when you have the courage to get out a buy ticket, Michael? What part of the market is most advantageous now?
Well, Tom, I think the reopening trades and cyclical value, that's really where the upside is. In a risk-off environment, we probably will see the so-called stay-at-home stocks outperform again. But investors should be very careful because the valuations there have exploded to the upside. If we look at tech and comm services and consumer discretionary, all trading above fair value based on the modeling that we do, and that includes these extremely low discount rates. So in an environment next year, even if it takes a bit longer, even if we stumble a bit with the vaccine rollout, but eventually, as the pandemic is brought under control, you get full recovery, probably some upward pressure on discount rates on the 10-year yield. That could be a real problem for super highly valued sectors that dominate the S&P 500 market cap. So I would be looking at reopening trades in cyclical value, those lower valuation stocks and sectors that are still cyclical. If they sell off, and they probably will, in a risk-off pullback, that's where I would be adding to the portfolio.
Okay, Michael, would you be adding on a day like today? Is this a buyable dip?
I think so. I think, the way investors should treat these pullbacks is, not to go crazy with any, one-day movement, but to gradually be leaning in if you do have some cash in the portfolio, but not across the board, not in tech, comm services, consumer discretionary, but in those value-based sectors and in reopening trades. So I would do it gradually. I would do it on a day like today for sure.
All right, so then there's a question of at what point do you change your outlook, especially if we're looking at what Paul Hunter was saying of East Anglia, this idea that we could prolong the pandemic for 4 months or more based on this new strain of the virus. Does that change your outlook at all, given the time frame shift?
Not drastically. I mean, I think that could be a problem in the near term for risk markets for sure, and so it could be uncomfortable and a bit painful for individuals that are riding out markets or buying on weakness. It could extend a bit further than expected, but I think the fundamental outlook of a full recovery or pretty close to a full recovery a year or so from now still makes a lot of sense, even if we have some hurdles to surmount. There's been a huge buildup of liquid assets in the household sector, almost $2 trillion by our estimates. That will probably be added to by this bill that's recently passed. I mean, there were some good things in it. There's some not so good things in it. I don't know if it makes a lot of sense to be giving people that have jobs and incomes checks at this point, especially with the recovery that we've had. But in any event, the buildup of liquid assets in the household sector will go a long way to compelling full recovery as the virus is brought under control. And it eventually will be, even if it takes a few months more than anticipated a day ago.
Right. Michael, I want to go nerdy on you here right now. We can do that on a Monday morning because Lisa's watching and, she's, probably going to go, what are they talking about?
I'm the main viewer here.
I want to go back to the equilibrium dynamics, back to Walras in the 19th century.
Oh, boy.
And on to Knut Wicksell and what he said about interest rates as a measurement of equilibrium. Do we know where our equilibrium is now within the artificiality of these interest rates?
Yeah, I think, Tom, we need to look at proxies for the equilibrium condition. And so we're getting kind of into the weeds here, but it is a really important concept for policymakers and investors to understand. So we don't want to just look at upward or downward pressure on discount rates or interest rates and say, oh, conditions are tightening or easing. It really depends on what's driving it. And if we think about this year and the way it unfolded, the huge crash in the 10-year yield on a level basis came with the pandemic. The pandemic hit us. Yep. We went into a depression in 2 months' time. Never happened in history. Now that we've been recovering over the last 6 or 7 months, there's been some upward pressure on the 10-year yield. We bottomed out around 50 basis points in early August. And even with today's pullback, we're closer to 100 basis points. With rising inflation expectations, rising industrial metals prices, until today, rising equity prices, we've had a huge run in the equity market. So conditions are not tightening, they're easing. And so we don't want to fall into the trap of ignoring, Wicksell and Walras and say, okay, rates are moving one direction or another and leap to conclusions. What's driving the rate movements in an economy that's rebounding should put some upward pressure on the neutral interest rate.
Okay.
That means by doing nothing, sitting there at a 0% short rate target and buying 120 billion a month in treasuries, the Fed is actually getting more rather than less accommodative. Critical point that's really overlooked frequently on Wall Street.
Yeah, but this is really important. Do you have a confidence that the compensating factors and dynamics as we clear out of the pandemic will lead to smooth and stable reaction functions, or can there be a bout of instability out of this we don't understand?
I think we could definitely have a bout of instability. I mean, the basic framework all the way through this recovery has been the wrong one for most forecasters. They were assuming a super slow recovery, just like we had after the 709 downturn. It's been much faster, at least until recently. We know we have a bit of a stall now. So, as the pandemic is brought under control, we're probably going to see a pretty forceful recovery reassert itself. And eventually we could see some inflationary pressure and additional upward pressure on discount rates. All things equal, that's going to lower stock market valuations, which are fairly elevated at the moment. They may make sense here, given current discount rates, but they might not make sense if discount rates are 100 basis points higher. So that's going to be the pull and push next year. I don't think it's really that well understood based on what I'm reading in the financial press.
We're going to have you back on again with less news flow. Michael Darda, thank you so much. We have to run. He's with MKM Partners. Lisa, a little bit of a rebound in the market, negative 100 on futures out to negative 81. It's a little better tape, Lisa, not much. I'm grasping here.
Ultimately, there is a question of when people are actually going to buy the dip that they were all expecting, right? I mean, that's basically what everyone who's come on Bloomberg surveillance over the past 2 months has been saying, which is that when you get a dip, you want to buy. My question of the day is this a buyable dip? Is this enough of a dip for people to feel like they're actually getting some value?
If you're just joining us again, the shock out of the United Kingdom of a closed down United Kingdom. We'll have much more from Queen Victoria Street on that. And also, of course, we're looking at the data and we'll look through the morning. We just had a 0.10 on the 2-year yield, which is really extraordinary. On Balance of Power, a timely, important conversation with Nicholas Burns of Harvard Kennedy and, of course, former NATO ambassador. Nick Burns on Biden. This is Bloomberg. Good morning.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.